Hey, how's it going?
What's up, man?
Pretty well.
Top Will, what's going
Yeah,
on?
I know you guys seen a couple different spammers in the Discord. It's just people getting their contact. That's what it is. It's like all these are real members that have been here for a while. I don't know why people don't have preventative situations in place to keep that from happening. Like poor man, for instance, he's been pretty much a member since I left FS and he came from FS, but apparently his account's hacked because he started shooting out all those links to random Discord and stuff. Definitely don't ever click those links because you're just going to get hacked yourself. Typically, they'll lead to something that will hack your account. So don't click any links that pop up when they start spamming all the different Discords. Even if you're interested or it looks interesting to you, don't click them. Give me just a second. All right. Yeah, so definitely, I'll be on top of them when I can, guys. It's just um they've been kind of like roaming through different hours of the night, right? And it's kind of hard to pay attention to that all the time. Like I got the one last night pretty much instantaneously as soon as it happened. But then the second one was another account that was hacked. It's these aren't bots getting in. I have things in place to keep bots from entering the Discord. A lot of things you guys probably noticed when you came into the Discord. You gotta verify him and all that other stuff. Uh, Bots can't typically get through those type of situations, but if your account gets hacked, that's a whole nother situation. All right, let's kind of roll into the charts, talk about what's happening, what we're looking at happening. I've cleaned up these charts a couple times, but for some reason it keeps on running back to my old charts. I don't know if it's a sign or what's going on, but it's a little weird. So, a couple different things here. I have quite a bit going on here, and I kind of showed you guys where I thought the top was going to round and that this was the high end and these are the low ends. And we've kind of verified that. I'll show you a couple scenarios of what you should look for that. And that's the round top. We're looking for a retrace, right? Your round top is your consolidation area. This is your distribution zone, your high end circle, right? That's your distribution zone. And what you're looking to do is you're looking to break that distribution zone, head down to your previous distribution zone, and then move off of that if price is to continue up. And that's what I would look for price, and that would align with your kind of move here. That would align with you kind of retracing to here and moving up, shifting away again. If price is going to go long, again, that's if price is going to go long. I want to make sure that that's very much understood. So looking at this, we got to pull back here, pull back here. So we're going to get rid of all that. We already know what happened there. We discussed that previously before all this played out. One other thing I want to point out here too is that price did break the uptrend. The uptrend was here, clear, easy to identify on the daily. That was your daily uptrend. Oops. Your daily uptrend move was right in here. Here, all the way up to here, and then it broke here, right? So if you're looking for that trend continuation pattern, that's already failed. Price needed to shift extremely hard against this for this trend to be valid, and this trend has pretty much been invalidated. So anybody talking about upside, they're literally just lying to you. They have no clue how to read money at all. When a trend gets invalidated, now we're looking for the other trends, right? And this is a trend invalidation for me because this one red line right here has clearly been broken. Price broke below it, and now this is no longer an uptrend move anymore. If you go in and try and rotate this and say, oh, this is the uptrend, you're just being dishonest with yourself. The strong uptrend was here. The strong uptrend was already broken. So, I mean, I'll tell you this. If you lie to yourself on the charts, you're only screwing yourself at the end of the day, right? That's just the facts. Never try to adjust an invalidation, right? Always go with what you have. And then if you're invalidated, then look for the next move on direction, right? Now, this invalidation could have shifted either way. An invalidation of my rising bear flag here would have been price breaking down, right? And if price would have broke down, or sorry, not breaking down, an invalidation of my rising bear flag here would have been price breaking out. If price would have broke out to the upside and found support above the price zone, my bear flag would have been validated. We're looking to go higher, right? That would be an invalidation of my outlook on this being a bear flag. And then I would have to look for the next move, like, all right, this wasn't a bear flag apparently, because price broke above my bear flag. And now I have to look, okay, what did I do wrong here? And what do I need to find for the next move? And what I would be looking for if price got above my price zone here and invalidated my bear flag, I'd be looking for price to continue up. So I'd be taking the move as a long move as opposed to a short move. A couple things that kind of validated my move here was what we like to call momentum, right? So I was looking for the round top, which was playing out. On top of the round top, I was looking for kind of like a head and shoulders move here. That's literally what I think is playing out currently. I'm expecting this move to break down and possibly retest and come deep, validating the high here. The other thing is too, is if we look over here on the left, price rejected in the same zone, right? So we got the same short zone we got here once price broke below that zone. Price broke below that zone, it came back up, retested, and then it broke down. So this was an expected move of breakdown and price action due to the fact that price literally rejected the same zone. And not only did it reject the same zone, if you look at body candles, your body candles over here are higher, your body candles over here are lower. So when you start to see price action that moves like that, it means that you're losing momentum, right? Momentum is the name of the game when it comes to money and volatility. If you're looking to play the game of volatility, and that's all this whole move is at the end of the day. It's just the game of volatility. And now we were trying to figure out, direction of move. And just like I said, 25K was the top. I had tons of people in the group, tons of people on Twitter and everywhere else. 30K, 48K, like it's obscene numbers, right? Just ridiculous numbers out of middle of nowhere, not realizing there's so many layers to get that high, right? If we come over on the weekly, like I can show you, like there's layers on layers to get up to something like that, right? You have to look, never go and be like, all right, 48K. It's just dumb. And I'll tell you why it's dumb. Because you should only be shooting for the next resistance if you're going long. You should only be shooting for the next support if you're going short. If you're doing anything other than that, you're doing yourself an injustice, because price can always go long and just play the zone. And now you've been stuck in a secular trade because you've been trying to get to this price zone for months and months and months and months and taking no profit on this trade. Granted, you haven't gotten liquidated because you took the breakout trade, right? You were right. And you took the breakout trade. You got no money for all this time. And then all of a sudden this consolidation moves this way. 6 months later, right? It moves against your long position. Did you win anything here?
No.
No. What did you do? You lost your position. That's what you did. You either got liquidated or you got knocked out of your position because you were stubborn and you were looking for higher price zones than what is currently available, right? We always look at the price zone that is currently available to our next move. Our next high for Bitcoin, again, the highest price zone is where the wicks were holding price. And that came up to 28, 29K. It did not go to 30K, not go to 32K, did not go to 40K, did not go to 48K. The next zone was 28, 29K. So if you were long and you were shooting for more than that, you were wrong on your trade, period. And I'm just being real with you guys, okay? I want you guys to understand how price moves. So same thing here. I'm not telling you guys, hey, we're going to the lows tomorrow, next week, next month. Why? Because price has to invalidate each support. And as we violate supports, we will see which direction price continues to go. And it could continue going down. It could also reverse off the move and come back up. Now, looking at price getting invalidated over here, that pretty much invalidated my uptrend. So my uptrend is no longer valid. I don't need to look at it. It's not, no point even looking at it. It's been invalidated. That is not what is happening here. So the only thing that's been validated, in my opinion here, has been this bearish up, this bear flag, right? It's the only thing that's been validated. Now, I want you to understand a couple things in this move. So this was our breakdown, right? And we did a similar move here, guys. Like this was just a lot more volatile, right? This right here was just a shift. And so people are like, oh, this is the true move. the fast move is the false move. 100% it is, guys. It always is going to be the false move. When money just boom, it's going to come back. It's going to come back. You have to understand that. Don't chase AI and this and that and everything else. Like if you can find trends to get into ahead of the move, take them, but you need to take your money because when this thing comes back, those trends are going to come back really hard, if not worse than wherever Bitcoin comes back to. Now, a lot of people like to quote Bitcoin, because I know 90% of the space is not buying Bitcoin. That's why I hate seeing those kind of posts. It's like, oh yeah, if you just buy Bitcoin, just buy Bitcoin. Nobody's buying Bitcoin. Everybody's buying altcoins because the liquidity and the X's are in the altcoins. They're not in Bitcoin. They're just not. And, you know, if you're buying Bitcoin, great. Hey, you got a great, you know, semi-stable position in crypto. It's one of the most stable coins in crypto. And that's, that's not saying a lot because the volatility is pretty nuts, even in Bitcoin. And again, you have to understand that it's all about liquidity at the end of the day. Pretty much, if you think about this from a bigger perspective, Apple's market cap by itself is more than the entire market cap of crypto, of all the crypto combined. That's one stock has more value than the entire crypto space. So once we kind of come good.
No, I was just saying that's crazy.
Yeah, it's nuts. And that's why when people say, oh, crypto's the future, this and that. No, crypto is a way to create wealth. That's literally what it is. It is not a way to sustain wealth. Do you guys understand the difference? Anybody not understand what that means?
No, I never heard that before. That's a good way to say it.
Yes.
I look at it. I never heard of that.
And nobody will tell you that because they're like, oh, just stay in crypto, just hot on hold. No, it's a game of get in before everybody else, get out before everybody else. That's all crypto will ever be in my eyes. I'll tell you that.
What about use cases?
Use cases are narratives. What have narratives ever gotten you?
Nowhere.
Nowhere. And I'm probably the only person, and some of you may not want to hear this stuff, but I'm probably one of the only people that'll tell you this kind of stuff. There are not, everybody's always like, crypto's the future, Bitcoin, buy Bitcoin is better than everything, yada, 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 right? If you're looking to sustain wealth, you buy stocks. If you're looking to create wealth, you buy crypto. That's literally the general differences, right? And you even in stocks, you can get wrecked too, if you're looking to sustain in the wrong positions, right? Like I think Tesla's one of those. Tesla's just too volatile when it comes to stocks. It just is. It's not a sustainable way to create wealth. Or not create, but sustain wealth. It is a great way to create wealth. And this is why you had the cult behind Tesla, buy Tesla, buy Tesla, buy Tesla. It's undervaluated. It's going to do 500 more X's or whatever, right? It feels like Tesla is being promoted like crypto. I don't like things being hyped. I like things showing on the books that they have money and that they're doing well on their sales, right? If they sell something, they need to have good sales. If they have good sales, they have good profit. If they have good profit, they have good growth potential. This is the difference between different types of investments. There is nowhere in crypto to verify any of these companies. They are all built on hype. Now, does that mean you can't create wealth? 100% you can create wealth. And I would never tell anybody any different, right? But if you choose to hold going into the next bull run, I am telling you, undoubtedly, you will get destroyed on whatever you've made. And I told everybody that last bull run, and people wanted to hold, and look where they are now. I saw many coins nearly get rubbed, 99% losses. Granted, they're not dead yet, but that's a lot to lose in a coin. Let these things pump up, get your liquidity, wait for it to pull back. And when I say pull back, what you saw this cycle, you will see again, guaranteed. Don't get caught up in the BS, all right? It's all it is at the end of the day. It's all just noise. It's all just bullshit. Like, these are all speculation. Speculation drives liquidity. Liquidity drives trading. Trading drives prices higher. and then eventually a top happens, and then you need to take your profit. That's just how this works. Good, Danny?
Yeah, well, I know we're not doing questions, but you're saying stocks to retain wealth and crypto to create wealth.
Correct. Correct.
Okay, thank you. I
Yeah.
have to revise my whole plans.
Even some stocks can create wealth, right? If anything, look, I'll tell you this, if anything ever creates wealth for you, you can leave some skin in the game, but you should take that wealth and reinvest it elsewhere. When wealth is created, it is because something has become so overvalued that everybody's in it. And if everybody's in the trade, eventually that trade's going to move back hard. That's what happened with crypto. Everybody was in it. Nike, everybody, right? Apple, like all these big players jumped on board. When that started happening, that was a red flag that we were nearing tops. Everybody says institutions are never late to the game. How many institutions got on the Bitcoin hype at the top of the market? How many big name brands got on the Bitcoin hype at the top of the market?
Well, like all of them.
It seems like it was majority of them, wasn't it? Tons
Yeah,
of them.
almost every single one got in at the top, not the bottom. They were trying to play on the liquidity that was available. They were trying to soak some of that up. That's what you guys have to understand. You can see these red flags when they're happening. When everybody in crypto was yelling 30K Bitcoin, 30K Bitcoin, I was like, we're sitting at 25, everybody's yelling 30. Previous high was 25. I was like, well, this thing's probably going to pull back from here.
Sorry, Will, so you're saying those institutions getting in on top, they're shorting it and they're just trying to hype everyone else?
Some of them are just dumb. I'll be real.
Okay.
Like people think
Okay.
that institutions are smart money. Some of them are literally just dumb. Right. And then there are other ones that are playing it strategically. Maybe they did get in early.
So what you're
They're
saying
trying
is
to-
like they look at the opportunity for the liquidity because of the money pump, and then they're trying to play either one side or the other, and just like we are, right? They're just doing it with more money.
They're doing it with more money, so they're able to push markets around a little more, right? And then on top of that, what does it give them? If Bitcoin's the hype, what do you get when you're Nike and you say, I'm partnering with this coin?
You know, a bunch of people flooding money into it.
You get flooding money into it, but what else do you get? If newspapers are writing about it, what do you get?
Publicity?
You get free advertisement. What's the highest cost to any company?
Advertising.
Advertising.
Publicity.
Think
Super
about it.
important.
It's smart. It is smart. When you see Robinhood, we're going to list Dogecoin. When you see Twitter, we're going to put Doge. These are free advertisement avenues. You got to understand advertisements, guys. Advertisements are manipulation. That's all they are. They are retail manipulation. You need to become less of a consumer and more of a creator / investor. Stop consuming. Everybody thinks they have to consume. Does your car work? Okay, you don't need a new car. Do you have a place to live? Yeah, maybe it doesn't have all the amenities you would like, but you don't need a new house. Understand what consuming means, right? Are you physically able to get up and walk and use your hands? Then cook your own food. There's no reason to go to a restaurant. Like these are consumer mentality things. And consumer mentality is what basically takes away the wealth that you could create. Because the less you spend on consuming, the more you can spend on investing. The more you can spend on investing, the more wealth you can create in the future. You got to think of this from a long-term perspective, guys. Like you got us to stop thinking, I'm going to make it rich next cycle. No, because if you make it rich, you need to reinvest that. If you get a couple $1 million, I know some of you will go out and blow that on stupid stuff. No, you need to turn that couple million into 10 million. Then you need to turn that 10 million into 100 million. Then you're starting to create generational wealth for you and your kids and your family in the future. And some of you are like, well, I don't want to be rich when I'm old. I want to be rich while I'm young. That's not how wealth works, guys. It's just not. If you haven't come from money, you'll probably not create that wealth that'll be generationally changing until you're old. That's just how it works. I mean, it's unfortunate. It sucks. I mean, there's going to be a couple people that hit moonshots, but hey, there's people that hit the lottery too. But think about the statistics on the lottery. What's the likeliness? 1 in 10 million. So what do you think that's likely? It's not going to be likely, just like hitting a moonshot. It's not. It's just not, guys.
Didn't Alex become a millionaire?
I mean, I don't know Alex's full net wealth. I would think, I'll just give you kind of a realistic number. I think maybe Alex made a couple million, right? But he's doing what everybody else should do. What's he doing?
Blowing it.
No,
No, he's
Investing it into his business.
he's investing it into a business. He's creating more wealth.
Right.
That is what he's doing. And that's what you should do also if you make it big. If you guys hit a moonshot, you should take that money and think strategically how you can reinvest it, whether that be in your own business, whether that be back into assets again. There's a lot of
Real
different ways to
estate.
do it. Real estate. Yep. There's tons of ways to do it. You got to keep on rolling and regenerating more and more and more wealth. That's how this is all played. Cut down on debt, right? And some of you are probably, eyes watering in debt and still continuing to invest. Cut that debt down. If you're investing too heavily and you haven't taken care of your debts, look, you need to split that investment money between your debts and your investments. Even if you're hardcore into investments because you think you're going to hit it big, what happens if you don't? Now your debt has just, completely obliterated you because you didn't hit it big. What happens if emergency happens? Now you guys aren't going to have money, right? You got to think about this from a logical standpoint. I know everybody went, look, when I first started, I was in the same boat as probably most of you, right? I was in this mindset. I just got to make it from a cycle to a cycle and a cycle to a cycle. I'm telling you, look, if you get, let's say you get a couple thousand in this cycle, and let's say you only make 200, 300,000. Let's say you have 20,000 in debt. Pay the 20,000 in debt, reinvest the rest. Literally just don't even pretend it doesn't even exist to you. That's the mindset you have to get to. You can't be like, oh, I spent 20,000 here. Now I'm gonna take 30,000 out, go buy a new car, and then I'm gonna invest the rest. No, 30,000 can be a lot of money in the next cycle. You need to keep reinvesting. You got to think about this from a long-term perspective, guys. You got to get out of this mindset of short-term gains for, light pleasure. A lot of people got that dopamine going in their brain where they get excited and that dopamine takes over logical thought. You don't want that happening. And that's one thing that I'm really good about. I'm really good about controlling logical thought over dopamine pumps, because I can get on a dopamine train all day. But you know what I realize when I'm trading? The money I'm trading is real money. It's not play money. It's not monopoly money. It's not money I just, went out on the street and found. I generated that from working a job, many hours. I got to protect that money. And even gains that I get after the fact, right? You may be like, well, you know what? I put in 10,000. I made 120,000. I can lose 30,000. I'm going to gamble on this. No, you got to maintain everything you've earned, whether it be through investing, whether it be through the job that you took to initially invest. It doesn't matter. You got to save that money. You got to keep it. You got to keep on rolling it back over and creating more and more wealth. I can tell you, look, and I came from a really poor family, guys. And I made it, I did what I needed to do. And everybody else in my family struggles. They really do. They come to me for help and stuff like that. I help them. I do. And it's the same thing with my friends. But I will never put myself in a position to where I have to pull my investments to do that. So think about things logically when you're thinking about them from an investment standpoint. And don't think $100 can't turn into 10,000. Don't think $100 can't turn into 1,000. Like it's very, very likely. Even if you have a small amount of capital to invest, you should continue to do it. I think it's just the smartest move anybody can make. Again, create wealth in crypto, sustain wealth in stocks. I mean, even sustain in bonds, right? A 5% yield right now, that's amazing amount of yield, guys. Like I know some of you were like, well, I can make 100x, 20x, maybe, or it can go to zero. That's always a possibility too, because if things in the market get much worse than they already are, which is still on the table as much as people don't think it is, you you could see a lot of these cryptos go to zero. You guys could lose the money you have in them. You got to think about these things from a strategic standpoint. And follow the money, follow price action. But let's get back into Bitcoin real quick, because I want to show you guys a couple things here. So when we're talking about Bitcoin, and again, when I'm following Bitcoin, it's a way to generate wealth. It's not a way to sustain. So for me, I take it from move by move, and I'm looking at liquidity and how it's moving. You got the drop here, right? And the drop comes down. It's the low. This is your low end of your falling wedge, right? High end of your falling wedge. And then you just take that move and you just bring it out, right? So our move shifted out. Our move hit its high. And now I'm expecting this thing to retrace. What am I expecting it to retrace? My expectations of a retrace and where I want to see it retrace and hold is I want to see it retrace and hold the same move that it broke out here, right? Why here? Why this zone? Anybody?
That's
Because
what accumulation
that
was.
was the former, that was the last resistance.
Yeah, there's liquidity down there.
Yeah, there's a lot of liquidity to the left there.
Where we moved from, there's a lot of liquidity still sitting here. A lot. And if you look straight across, oh, look at all that. See all that price action volatility right here? That's a ceiling, right? So we shifted from here to here. The low from the high of the bear channel. I could take this thing and I could run it all the way across, and it's going to be even. See that? It's going to be even. So that's your breakout structure. Your breakout structure is where the bear channel or bear flag started forming. This is where it started forming. Your breakdown structure will be the distance from the low end. Now that could occur here where we're at. It could occur over here. It could occur over here, and that would just bring price higher, right? But wherever this breakdown structure occurs, you should expect the high to the low to be the same as the breakout from over here, right? So I'd expect price to break down that distance, and that distance is right now is going to be deeper than here. It's basically going to be 19,573. If we can get price structure to break to here on a higher time frame, and I'm going to take this up to a higher time frame to show you guys what my expectations are. If price holds here on a weekly time frame, I would expect, and this is the beautiful thing about looking at multiple time frames, right? I would expect that we would be looking at the inverse head and shoulder pattern. That would be a bullish pattern. So if price comes down, it's basically touching the same price on, and as over here, right? See how we got this double top pattern? I love these double tops, right? If price can hold this zone, can hold this 19,573. Again, it's kind of an uptrend move. If it can hold that zone, we would then be looking for price to reverse and come back and then break out. And our breakout zone, again, is not all the way up here yet. Our breakout zone will start to here, about 28, 29, probably pull back. And if price wants to continue, it'll then be 30, 31, 32, and then pull back. And then if price wants to continue, it'll then be 39, and then pull back. And if price wants to continue, it'll then be 46. Now, this will be a bullish case, right? I'm giving you both sides. This would be a bullish case. That is what I would see for an inverse. Now, will all this happen in one move? No, more than likely, price will come down, consolidate, probably try and come back up, then come back down, and then move, right? It'll be a longer term move if price is going to verify here. So that would be something I would look for. Does that mean that that's guaranteed to happen? No, I need to look at all possibilities, right? This is expectation for a move out of the zone. If price continues to hover up here, what am I expecting?
A few taps on that resistance and then a breakdown.
A breakdown, you got it. Perfect analysis there. I would be looking for a round top into a bigger breakdown move, because this would then be a shift from the low to the high. And you may be able to lose the high. It is the high. Look, the high is over here. The high is over here. This has been verified as the high. If price remains trapped here, this would become a distribution zone for them to go very, very deep. So you don't want price to stay up here. You do not want price to stay up here. You want price to do what I said and retrace back into 19.5 and shift away if you're long, if you're a bull. If you and a lot of bulls are looking for this price, right? They're looking for 21.5. They want to see price maintain the high up here. But again, as I stated, I don't want to see it maintain the high up here because my expectation is that they maintain the high, we're going to do chop, right? And chop at the high position versus the low position means price will typically reverse back down deeper. We don't want to see that if you're a bull. In my opinion, we want to see that breakdown structure in that 19.5 and that reversal move. This is a strong support here. It's a very strong support. Remember, when we broke down here, we didn't stay down here for very long. We basically shifted out very fast, came back to the zone. The revisited area would be the lows right in here. It would be this PLC right here. So if that's what we're looking for, that's what I would, in all intents and purposes, be looking at for right now. What is going on here? Oh, there we go. All right. So that's my expectations for BTC. Now let's go with the bear case, right? Again, one bear case is we consolidate the high here. This then becomes a distribution. Price breaks down extremely bad, right? Now, where would I be looking for price to break down to? It all depends on the distribution, but at the end of the day, I would be following the lower trend here. I think this is a really solid trend to be watching because if price breaks down, I would expect this trend to hold as support. And the reason I would think that is because not only do you have a strong trend here, you have a strong trend up here, right? Price overall likes this trend. It likes to hold this trend. This is why you can't take a bounce as a shift up, right? Never just take it as, hey, boom, bounce, go. Price doesn't move like that, guys. It never does, right? I want you to understand that price never moves like that. These things can get tricky. Just like where price right here came down, bounced off of support, right? Lower support, came back up and boom, broke down harder. Now, as we continue to consolidate, I want you to also keep in mind that price overall is kind of in this bigger falling wedge. Now it's broken out of it a little bit. And a lot of people they're looking for this. They're looking for that break here and hold here and a reversal move. I don't think price will reverse here. I think it will reverse here around that 19,573. There's a lot of liquidity in this lower zone that I think they want to grab. And that doesn't mean it needs to maintain price here. No, I would like to see candle body closes kind of in that general vicinity, right? If I can get candle body closes in here and kind of see this thing kind of scooping off of it, I'd be taking that for a long position. If I see candle body closes start to break below it, I'm expecting that they're just going to fall back down to our previous support, right? And a fall back down to our previous support from where we're at would bring us down to 13.7 rather than my 14K original where I thought they were going to start to break down and kind of bounce this 13K and then come back out. So now it'll be 13.7. And then again, they can catch another bounce and they can continue trending this whole thing all the way down. That's what people got to understand. Like this trend can continue to be respected and that support can continue to be a support and we can continue to just keep going down. It doesn't have to stop here. So we have to understand all sides of the trade, right? This is why we don't buy the breakout. We buy the trend, right? Or we buy the confirmation. One of the two, because if this was the inflection and this is where price decided it wants to go the other way, we will get a confirmation at a higher low, we'll get the higher low, price will shift, confirm the move, breakout. And if you want extra confirmation, really, I'd wait for this breakout to this consolidation, because if we get above 25K and can push that 28, 27K, we'll then pull back to this 25K and find support, I think, right? And continue up. And this will be a strong shift move, right? It'll be a strong shift move. This would be a solid way to look at the market as opposed to everybody trying to call bottoms. I think calling a bottom is just, it's dumb. And I think the people that are trying to do it, like, there's no confirmation of it, right? There's literally no confirmation. I feel, that's all I
Hey,
see
bro.
on Twitter. Good?
Sorry, I just wanted to ask before I forgot. So the confirmation for that, if it broke higher, would be the retest at 25 and then it goes up? Would that be the confirmation right there?
So it would be the retest of 19.5, a shift away from 19.5, a breakout of 25. That then should shift all the way to 28, a pull back to 25, finding support on the 25. Yes, I would consider that a breakout trade. And now the market's moving the other direction and it's no longer moving in a downwards position, is the way I would take that. So I'd be taking that position for a long position. So if I were to clear up this chart, I'll kind of give you an easy directional kind of where I would be looking for that to happen. So I'd like to see it pull back to here. And then I'd like to see this top up here. And if you look at this top, like, it's a perfect stop out, guys. Like, look at these candle bodies. It's a perfect rejection in the same exact zone. You can't be any more perfect than that. That's why people are like, oh, yeah. It's like, no, you're doing the same thing you did over here. You're just doing it for longer. Price isn't going to instantly reverse off of here. It's going to come back down. It's going to find support and shift, or it's going to come back down, find support and break. So those are the two moves. So if we were looking for price to continue up, I'd be looking for a move to here, a confirmation bounce here, maybe some consolidation here. I should back out the 25, moving all the way up to 28, 29 here. That's price right here. A pull back to 25 here, maybe some consolidation here, and then a shift from there, right? Now, if you guys look at this, does that look like a solid uptrend?
Yes.
If we were looking for one. Yeah, I'd say that, and that looks healthy. Why does it look healthy? We're getting solid confirmations and we're getting a good uptrend, right? It's not too angled. You never want an uptrend that looks like this. When you see an uptrend like that, no, when you see, like, I usually look for like 35s, right? So like these slightly angled uptrends, I look for price to shift away hard, come back, follow across, shift away hard, come back, follow across, shift away hard, come back, follow across. And that's a true building market. Does that make sense to everybody?
Yeah, makes sense.
Yeah, that makes sense. Well, at what point in that trend that you just drove out, at what point would you, I know you're not interested in buying Bitcoin, but at what point would you put money in that? Like if it was,
There's a couple
coin that
different
you
places,
wanted
a
to
couple different
buy.
places. So I would be buying on this retest here because I think people would be the most fearful here. And I would want to see it hold here. I would have stops below wherever price was on whatever coin, just a little bit below that. Why would I have stops a little bit below that? Because if Bitcoin goes this direction, it's gonna go deeper, right? And it's gonna follow the trend we just talked about on this breakdown, which means it's gonna more than likely go pretty deep if that happens. Especially if it starts trending this way and then just has an all-out breakdown. It will hit this trend again if it breaks below this position, I think, just by the way it looks. Now, does that mean it's going to break down to 8,600? Maybe. If it takes a long time to consolidate higher, it could also drop down right here and find support there, right? It doesn't have to drag out very long either. It just take the trend as your friend, and the macro trend I would take as a bounce. Now, one thing you can get for confirmation for that is you could take the lower trend of wherever it lands if price does go deeper, and you could take the horizontal trend and see if they line up, right? And if you got a good lineup on the horizontal, matching the drop, like that is a really good spot to be looking at the DCA, right? Even if price can go deeper, like these are key points where you should be looking for DCA positions. I wouldn't have, I kind of would fault people here. But like, if you were like, oh, I was just playing the low here and you were DCAing these lows, I wouldn't really fully fault you for it. But like, I could kind of see the writing on the wall that this whole area was a big distribution zone and that they were looking to break down more. But not every trader is going to see that, right? And really, you couldn't see the trend until this initial dump happened. And then once you got that initial dump, you could then see the trend, and you saw Bitcoin continue to respect this trend, right? And continue to respect this downtrend. And as it continued to respect the downtrend, then you know, okay, we are going to get volatility, and we're going to continue to keep moving in the direction unless we get an uptrend that looks more validated. This would be a validated uptrend for me, right? You've got a good pullback, consolidation, shift away. Good pullback, consolidation, shift away. Good pullback, consolidation, shift away. That's how you want to move out of a bear market. Because if you're doing that, you're not only respecting the trend, you've also reversed and you're rounding out, right? These are good positions to be looking to take positions on markets. Now, some of you may be like, well, Bitcoin went like this. This is after the halving. This is after the halving, right? Prior to that, Bitcoin had many pullbacks and rounded out of the move before it happened, right? So all you had to do was kind of catch that round out move, even if you caught it here, even if you caught it here. If you caught it here, did you miss out on gains up here?
Nope.
Yeah, that second circle.
I mean, you could say yeah, but again, this all comes down to risk to reward, right? You were risking a lot to take positions here on a gamble, because Bitcoin could have easily broken even deeper. I can tell you the S&P did. It did here. So when you look at it from that perspective, you're gambling in this position. Now, what area could we have looked for liquidity? Could look for that, right? So what area could we look for liquidity here in a worst case scenario? We could even look for that. For liquidity. But we have to understand and pay attention to how the move is moving, because liquidity in the market will show you what the direction is. It's just, if you look at this from a higher time frame, is that not patience? Anybody?
Yes.
You have to be a patient trader, just like you have to be a patient investor. Always have patience. There's no panic to get into the market, guys. None. Zero. Even if Bitcoin, again, if Bitcoin shifts out and goes this direction, then people are going to see up. I can almost bet you this is going to come back hard. I almost have no doubt that this kind of move before the halving will be an exit liquidity move. This would be less safe, in my opinion, than if they were to shift back, consolidate, move. Shift back, consolidate, move. And I'm telling you guys, on a bullish thesis, this would be a higher low. And it would invalidate any more downside. And if it invalidated any more downside, well, I guess I was wrong. But I'm willing to step on here and tell you guys that. I'm
That's
also
not the
willing to
trend.
tell you, good. I didn't mean to cut you off.
That's not your trend to be wrong.
Yeah, and I want people to understand, anybody can be wrong in this game. Anybody, right? It just, I want confirmation. Confirmation is what has protected me on capital. I can tell you, any trade that I've taken without confirmation, when I first started trading, destroyed me at some point or another. Did I get some good ones? Yeah, I did. And I lost it all back to taking non-confirmed moves. Once you start taking the patient move and waiting for the trend to follow through and waiting for the trend to prove itself, then you'll realize you will make more money than you'll lose. This isn't an everyday trade, guys. Like, I know some of you guys are like, I got to be in it, I got to get out every single day. No, you got to live life at the end of the day. If you live in the charts day in and day out, this won't be fun, right? You're living for money. If you wait for the moves to come to you, you'll typically always be on the right side of the trade at the end of the day. If you come to the trade, a lot of the time you're going to be the exit liquidity, because you're coming in looking for the trade, right? if you're coming in looking for the trade, you're always looking for the right, most optimal trade. And typically you'll come into a trade too late or too early because you just want to get it done. You just want to get your trade in for the day, your one successful trade. And then that trade will go south and then you'll start chasing and you'll be like, well, I got to make up for what I just lost. And then you'll lose more. And then you'll continue to lose more and more and more and more. And then you'll hit a big one. You'll be like, oh, look, I got it all back. And then you'll lose more and more and more and more. That's not progression. That's regression. You can hit a trade and get it all back, and then you'll lose it all again 6 months later. How much progress have you made in a year?
None.
None. You've made no progress. Even if you cut even, you've made no progress. You're trying to build liquidity. You're trying to build wealth. That's it at the end of the day. So always think about it from that perspective. Don't get caught up in the BS hypes and stuff like that. Again, I looked for a lot of things that I told you guys that were rolling floors, not pumping numbers. Because I think a lot of these things that are pumping numbers, they're doing exactly what Bitcoin did. They hit a floor, they rolled up high, and they're going to come back if Bitcoin comes back. And Bitcoin will come back this much while they'll probably come back this much. Because if Bitcoin forms a new low, you're going to see a lot lower lows on some of these alts. So always keep that in mind too when you're trading alts. They can be very dangerous when it comes to liquidity. Pay attention to 24-hour volume too. That's something else I want to point out to you guys. And we're gonna get into the rest of the market here in a minute. But let me show you guys something. Yeah. So if I were to come into a coin and look at it, take it like this, and watch this every day. What do you see right here?
Percentages.
Of what?
24 hours.
24 hours. What does this define?
How much liquidation is being used? In 24 hours?
Volume.
Volume.
If you're starting to see a volume drop on a coin, get the hell out. Right? And you want to watch this not necessarily day by day or 24-hour volumes, but watch it over time. Right? Watch it over time. I think this one, a stable coin. What is this? Yeah, it's a stable. We're not going to go with this. But let's go with let's see. Let's pick a random here. We'll go with Engine. What does it say right there?
41% drop.
That's a 41% drop in volume. Now, what does volume define here? I'm showing you. What does it define?
A measure of how cryptocurrency is traded in the last 24 hours.
Okay, does that mean a lot of buys, only buys?
Buy, sells, holds.
Buy and sells combined, right? So if your buy and sell volume combined is dropping dramatically, it means that the coin has become less interesting. Whenever a coin becomes less interesting, there's a lot of concern for that. Now, what you want to see is you want to see this right here not really be a thing. Maybe a -5, maybe -10, but we're seeing here with Engine, it's down 41.59%. And whenever you see interest drop on a coin, what else drops with interest?
The price.
Value.
Value. There you go. And the price. Yep. The value of the coin goes away. This is why what I mean by crypto is a hype factor. All right. You can read all these all you want. And they can tell you how they're changing the world and how they're partnering with this person and that person. I watch so many coins partner up with like, yeah.
Quant was a good one.
Yep. I watched tons of coins. They partnered up with like FIFA. They partnered up with like governments. And then literally 6 months later, those contracts were like, we're going to put it on pause or we're not interested anymore. Do you see what I mean? So a lot of the time, I think when they announce partnerships and stuff like that, they haven't even got a confirmation of partnership. They just have a contract saying, hey, we'll entertain it. And then later on, you know, when cryptocurrency doesn't become a thing anymore, all these different companies pull out. And what do you think happens to these cryptos? They fall back to the floor. but never ignore the fact that they were able to get a partnership with Mercedes, that they were able to get a partnership with FIFA, because if they were able to do that and prices rolling around these ranges, I'd be a good pickup. Because they had the ability, they had the contacts to get in contact with those companies, which means they had the ability in next cycle to do the same thing. But you don't buy it here, you let it come back to its lows. And that's where Engine's heading, right? As well as a lot of other coins. And if you look at the fall off on a lot of these, they've seen significantly more drop than Bitcoin. Now, I want you guys to look at something else too. What are you noticing right here?
2021.
$1,021 billion. Does anybody know what this was a couple weeks ago?
9 something.
Nope.
Yeah, 9. Yep.
Nope. Higher.
Wasn't it like 1.2?
It was like 1.2, 1.3 billion. Yeah, maybe even 1.5. I might have missed that portion. You might be right. So this market cap had hundreds of billions of more dollars a couple weeks ago when we were sitting at 30K Bitcoin. When everybody was screaming the number of 30K Bitcoin. This market was sitting at 1.2, 1.3, maybe even 1.5, like Boris said, right? Where's it at now? It's about to crack back below 1 trillion. At the rate of market that's dropping here. Now, do you know what this incorporates in liquidity? Does it just incorporate crypto?
Stocks to it.
No, it is just crypto, but what types of crypto? Is it just Bitcoin?
No, it's all coins, all
Oh,
types of
all
All
coins.
coins. What all types of coins are there?
DeFi, Web3.
I'm looking
Meta.
for one specifically that's very stable.
Stable.
Stable coins. Yeah, there you go. USDT, USDC. That's included in that market cap. So if this market cap's going down, is money flowing into crypto?
No,
No.
What does that tell you about what's happening to stable coins?
Ponzi scheme.
They're taking money out of crypto. Because this incorporates all of these stables. So if they were interested in staying in crypto, this would not be moving because they would just be rotating the stable coins.
Right, I see what you're saying now.
I just pulled up USTD. Jesus, what a drop.
Do you guys see what I'm saying with that?
Yeah,
It's crazy to think about. A lot of people don't think about that. They're like, oh yeah, look at all the money coming in crypto.
That's like instead of just selling your stocks, it's like taking it out of your brokerage account.
Yeah, exactly. It's like taking out your brokerage account and putting it in your bank account. And knowing how hard it is to off-ramp and on-ramp money, why would people do that if they had intentions to come back into the market? Especially from a brokerage account, right? If typically people take money out of a brokerage account, do they typically put more money back in later? Or are they taking it out for a reason?
For a reason.
And depends on if they're about to go into a recession or not.
Correct. Yeah, it depends on whether they feel like their money's safe there and whether they're about to go into a recession. And typically they will take liquidity out of these different asset platforms, the entire ecosystem, and put it in their bank account and sit on it until the right time to buy.
So if that happens, things start to break.
Yeah, the things start to break in the manner of liquidity being less and less fluid, right? We're also seeing a lot of attacks by the government onto different systems that are funding cryptos, right? Like Silvergate, for instance, it's a great example. Silvergate funded a lot of projects. Once you start to see those funding resources go away, you stop seeing creations of projects, or you start seeing rugs of projects, right? They just create them and rug them from the average retail. And then you also stop seeing development of projects because they can't get funding to continue development. Everything costs money to run. Companies cost money, teams cost money. It costs money for Cardano to keep developing every day. So if they're not able to get funding, how will they get funding if they're an established crypto? if they're not able to get funding through a bank.
Staking, would they be able to get funding staking?
Where does the staking liquidity come from?
Well, from investments.
From the investments, right? So if a crypto is now no longer getting funding from a bank and they need to get funding, then in that case, they would probably sell their tokens, right? Back into the pool to create more liquidity to continue to pay their employees. So if those two things kind of combined happens, what happens with price?
Falls off a cliff.
Starts to fall off a cliff because you no longer have buyers, right? And you may be like, well, somebody needs to buy for somebody to sell. Yeah, retail will buy and retail will continue to get sold into. And that's what we're seeing a lot of this drive. A lot of this drive and liquidity is it. And this is the thing that I want people to understand, because this is the argument that I think a lot of not so smart investors are using, is they're saying retail has driven these rallies. I agree. Retail has driven these rallies. Why is big money not driven these rallies? Anybody ask that question?
They already get their profit.
I think it goes a little deeper than that.
Because they're going for the liquidity that the retail is providing.
Yeah. You are the exit liquidity. They are letting retail feel comfortable in buying. They are letting retail become the buyers of their sales. Understand what is being perpetrated here. They are using retail as exit liquidity. They're like, oh, this is heavily retail. You have to understand these people have significantly bigger positions in every asset out there known to man than retail does. They can sell you all the way to the floor on most of these things. That's what your average retailer doesn't understand. There are massive positions of big money, big institutions that can sell you through the floor on a lot of these positions. So when you think about it from that perspective, if institutions are not getting on board with buying, they're not going to buy on top of retail. They're just not. Like, you have to think about this from a logical standpoint. To make that argument, to me, is just illogical. It doesn't make any sense at all. They'll sell you back down. They'll push you out of your positions because you'll sell the bottom, and then they'll buy back in and force you to buy on top of them. When you think about things from a logical standpoint, you stop building into the illogical thoughts that people come up with. I posted a thing on Twitter today, kind of voicing towards like people that are always saying, I feel, right? And I clearly state there, I feel is not an investment strategy. It's not. If you start your sentence with I feel, or you add the words I feel into your sentence, and granted, I know some of you have heard me say, thoughts in the I feel scenario, but it's not how I'm trading. I'm not trading off of feelings. I may feel a certain way, but I let the chart itself tell me the direction, right? I never go with my feelings on a trade. Now, people have to really understand that when people are doing that and they have no logical standpoint other than, well, retail's pushing price up and I feel like, that doesn't match any type of logic at all for me. It just doesn't. And I think to utilize that as a way of thought is just a bad thought process. And I see people do it all the time. I go into different investment groups, different spaces, and it's always I feel. That's what I always hear. Or always retail can just ignore it and buy it all up. Ha ha ha. Put all the people in America, put all their liquidity together, all retail, and put it against Bill Gates. Put it against Elon Musk. You guys think you have more liquidity? Anybody?
No.
No, not at all.
No, you don't. That's why you have to think logically in this space. You can't sit there and say, well, retail can just buy it. No, retail cannot. Retail runs on paychecks. That's how retail runs. Retail are consumers. They buy the products, right? There's only so much money to be invested by retail. A lot of it gets used up in consumption, AKA consumers. Most of the money does not get invested like people think it does. There's a very small portion of retail that actually invests. And they could be like, well, what if everybody invests? Well, then there wouldn't be consumers, would there? And then everybody would be rich, right? Except for consumption would go extremely down. And that's pretty much how wealth is created. Charts that show retail versus big money. So it's more about just measuring inflows. So kind of like, are there $100 here and there being invested, $1,000 here and there being invested, or are there hundreds of millions of dollars here and there being invested, right? It's more about inflows than it is about kind of depicting that, I would say. I can try and figure out some kind of charting to kind of show that. There's a lot of data that shows inflows that you can find and stuff like that. I'll try and find the one that I was utilizing before to look at, but there was a lot of data showing that, retail is pretty much the buyers of these rallies right now. And I think whenever retail leads the rally, I think retail is the dumbest investor you can be. And I'm saying that not as an insulting factor to anybody here in this space, but I think retail makes the worst investing decisions known to man, right? They speculate and buy and speculate and buy and speculate and buy. And it's just always speculation. It's not really looking at the data and the numbers and trying to figure out, does this make sense or not as an investment? And when you get to the point where you're starting to look at the data, then you really truly know how to invest. Again, this is my thesis on Bitcoin. I don't think anything too crazy, I would say, for right now. We're just kind of hanging out, waiting for the mood to prove itself. Again, if we stay up here, I'm looking at this distribution zone. We come down to these lower zones, I'll be watching 19K very closely. And if we can shift away, that'll be really good. That'd be a really good sign, because I think if we move away, we consolidate here again and move away, move back to this high, I do think we'll break out. Will I take out the breakout trade? No, I told you guys I don't take breakout trades, not in a bear market. Price will then push up, it'll come back, confirm, I'll buy in the confirmation, right? If price confirms. These are the things that you need to look for. If price breaks the trend, right? Once the trend has been established, if price breaks the trend, I have stops in place to get me out of the trade, because this will probably end up going back down. Again, that's another invalidation that could play out too, right? Price could easily just, rather than continue trending up, it could go up to this high and then start to pull under and then move under, and then retrace back up, retest, and then start to fail, right? That's always a possibility too. So you got to know the reason I tell you guys these many different ways, you're probably like, dude, you got like 10 different ways every time. Yes, because if it starts moving a certain way, I know what to do ahead of time. That's why I have 10 different ways, because I'm like, okay, if price goes this way, I continue to play long. If price breaks here, I go short. If price breaks here, I go short. Like I always have an exit strategy ahead of the move, because I'm looking at this from many different angles. I don't go into a trade like most of the people, on CT Twitter and all these investment groups, and go like this. If you look at where we're at now, look at your growth potential. Okay, so it doesn't really matter where you invest in here, because you have all this growth potential. Nobody knows what the growth potential is of anything, period. And I'm always going with the best probability trade, exactly, because probabilities is numbers and numbers is everything. That's really what it is at the end of the day. I'm looking at best probabilities, but I'm also looking at even lower probability trades, because if my lower probability trade starts to play out, hey, it may actually be the higher probability. I was just wrong. Again, you never let bias drive direction. You let price drive direction. That's the biggest thing that you got to learn in this space. You can easily say you could buy anywheres in here and you'll make money in the next cycle. And you know what the argument is in most spaces? It's, do you think Bitcoin will hit 100K by next cycle? Everybody always says, sure, then why not buy here? Okay, why didn't you buy at 40? Why didn't you buy it? It's going to 100K. Why not buy here or here? You guys kind of get why that's a little bit annoying hearing that from people. It's like, you're not looking for the best probable trade. You're just saying buy in a random spot because you're low and hey, Bitcoin go up. Does that make any sense to anybody logically in the way I just explained that?
No, I mean, yeah, the way you explain it, but then when you said it that way, you got a lot of people that follow these people that say this and you get wrecked.
Yeah, because they're like, oh, if you buy here in 2 years, you're going to be 100K Bitcoin. Okay, but you're telling them to buy here, but you didn't tell them to buy here. You didn't tell them to buy here.
They're telling them to buy a premium price.
You're telling them to buy a premium price zone rather than a less premium price zone, right? And everything's always a premium price at the end of the day. It's just, is this a higher premium or a lower premium? You got a lower premium at the low ends, right? And it's only proved to be a lower premium as long as trend continues to play in your favor. So trend continues to play low. This was just a lower premium. This is a lower premium. This is a lower premium, the lower premium. And then once price reverses, guess what? This was the best price. But as long as you're staying buying the lower premium zones, even if you're DCAing, that is your most ideal trade. It just is. And some of you may be like, maybe some of you believe in charting, some of you don't. I can show you the data, and data drives everything. I don't even need to show you a chart. I can do this from a data perspective. I can do it from a chart perspective. It's not difficult. Look at average highs, average lows for a 6-month period, so on and so forth, and kind of do your math. And then, okay, this is the low of the zone, this is the high of the zone. If we were to look at it from all the way over here in June of 2022, our drop, all the way now to, that's basically almost a full year, right? You're looking at a solid 9-10 months of price action here. So if you were to look at it from a price action perspective, ignore the chart. Look, do a number scenario. Your number is here. And you want me to show you the other one, guys? Watch this. I'm going to show you the coolest thing ever. The other price zone is here. Why is it there?
Support resistance.
Nope, that's not at all what I'm looking at. Just from a number perspective, why is it here and here? Did price stay here for very long?
No,
No. Did price stay here for very long?
Yeah, it's your range.
Yeah, it's longer.
It's a range, exactly. You're looking for your high range and your low range, and you're looking for the best probability trade on your high and your low. Oh, look at that. My high range, well, we can even take it down to here. I like to have it up here on that 20K, but we can even take it a little lower. My high range and my low range, what's the best price to buy Bitcoin in my high and my low?
There's that 19.6.
19.6, guys. That's data. That's data. That's all that is. That's data. It had a low amount of time hanging out here, which means that if price is approved to go long, it'll revisit 19.6.
Isn't this what algorithmic trading is too? It's like
That's exactly what it reads. That's exactly what it reads. It goes through and it says, this was your high. This was your low. Price tends to like the low longer than it does like the high, right? If price doesn't sit at the high for very long and it likes to sit at the low, this is probably the consolidation low, right? So if this is the consolidation low, you don't buy here, you buy here. Even if your bias is long, you buy the low end range price. Does all this make sense to everybody?
Yes.
Yes.
That's
So
just
even
data.
though it broke out of that range, even though it broke out of that range temporarily, it doesn't matter as long as you can see a longer trend kind of build in that range.
But it didn't break out of it.
That's
Look,
something.
this is price. From
No, like when it went below it.
oh yeah, because this is an anomaly until it's not, right? It is until it's not. So if price comes back down here, technically you should buy here. If price breaks down here, you should respect this as the low. And then if price breaks here, you have to look to your right and look where the next price zone is. Does that make sense? So if I
But-
were to do this with a bot, for instance, and that bot was always looking for the best possible prices for me, that bot would buy here. If price came back to here, that bot would buy here. What would the bot do here?
Sell.
It
No?
would sell. And then the bot would do what? It would
Right.
wait for
Wait.
price to come back. Now, if price shifted out of my zone, what's the bot gonna do?
It's gonna look
Oh.
for a new high, it's gonna look for new support and resistance.
It's gonna look for a new support and resistance, which should already be established through the bot. And what's it gonna do? What's it gonna do if it breaks out of the zone and I don't have a position? It's gonna wait for the retest. It's gonna buy my position. And then what's it gonna do if it comes back up here?
So,
Sell
What-
again.
What's it gonna do if it breaks down into here?
It's gonna buy.
If it breaks to here, it's gonna sell. Because more than likely the trend's gonna come back down to here. And then it's gonna buy again. That's how algorithmic bots work. Now, don't use a bot made by somebody else ever, because they can exploit your account. Ever. But I'm telling you, if a bot uses this kind of metric to read price, why can't you?
Right, and we have something the bot doesn't have, which is we can look at news, we can look at other factors too.
We can be like, oh, price broke down here, bad news hit in at the same time. We're probably going to trend back down. So always keep this in mind. It's just everything at the end of the day is a trading range, guys. That's all it is. It's nothing crazy. I know it may feel like there's all these things going on. It's a trading range. We ranged here and we really didn't even sit here and complete price. Look, price came through the zone and then broke back above the zone, which means price did not want to sit here for very long. Liquidity wanted out, liquidity pushed up. Expectations are sell here, sell here. Even if you would have bought in here, expectations are to sell there. Why? Because it's the high end of the range, period. Not here. Why would it not sell here? What did price do here?
Took the longs out.
It took all the longs out. Not only did it take the longs out, it never stopped moving. It just went straight down. What did price do here?
Straight up.
Straight up. It never stopped moving. It broke straight through. The bot is not going to sell into this position because it's a strong uptrend. So the bot's going to look for the next resistance, which is the high, right? And it's going to sell here, especially once it starts seeing this, right? Because this is not matching this move. This is a weakening, a softening in price. I can tell you every single person out there on CT Twitter, look, they were like this. And they were like, look, guys, it's an ascending. We're going to break out here. Price going to take off, yada, yada, yada. Look, uptrend, they're like a little small pullback and then go. And what happened to price? Well, it broke their uptrend, didn't it? No longer is this an ascending. It's now breaking down. This is why you can never have a directional bias and don't follow people with a directional bias. I mean, you guys do what you want, but if I'm an emotional trader, I wouldn't follow people with a directional bias. If I'm not an emotional trader, hey, follow people with a directional bias. Why? Because you want to see how stupid they can be. And it'll remind you on how patient you need to be as a trader. Yeah, I wouldn't use any bots, guys. Like, GridBot on KuCoin is made by KuCoin. You can use those. So those are all verified and used by them. Like if you're trading on their platforms, but I wouldn't have a substantial amount of money on any centralized exchange. Just FYI. Like if you're trading a small amount, it's no big deal. But if you're trading a lot, I wouldn't do that. Does all this make sense to everybody?
Yep.
From a
Yeah,
data,
it does well.
awesome. Because from a data perspective, guys, like this is not bias. It's not anything, right? It's literally data. You got a strong trend. All right. And if you were to go on a website that displays data, it would show you exactly what I'm telling you right now. You got a 273-day trend that has had a high of 25K and a low, an average low, not anomalies, average low of sitting around 19.2, 19.4, 19.6, right? In the 19K range. That's your average. You're always looking, a bot or anything that's looking for pricing is looking for an average high and an average low, because you're looking to exploit price action in between the average high and average low. This was an easy anomaly because once price broke, it never respected, it never bounced, it never retested, it shoved straight through, right? No retest of the low, no retest of support, nothing. It just went straight through, came back and went straight back up. This was a washing of the market. They washed down, pushed over, washed back up, built liquidity. The best way to build liquidity is the what?
To buy.
Accumulate.
The best way to build liquidity is to push everybody out and then force them back in at the highs. Because everybody's fearful once your highs get broken. Once that got violated, everybody bought up here. And what did the market maker do once everybody started buying?
Profit.
Started distributing to all of his buyers or hers. Pay attention to the move, right? High zone, low zone. Understand breaks, understand market structure. Your structure is here, right? Your respective price needs to be somewhere around here. And if you break lower than that, I honestly, a lot of people are expecting price, if they break lower, to double bottom. Because of how long we spent here, I think they'll probably go deeper. If they break lower, if they break this zone, I think they will go deeper.
Well, if you look to the left, there's still liquidity out there.
Yeah, there's a
Well,
lot. There's a
yeah.
lot of liquidity over
And
here.
they could go for it.
Yep. Liquidity always gets respected, guys. Always, always, always. And I'm using Bitcoin because I love the volatility. I love the volatility, guys. Like, this was a classic move waiting to happen. And I knew people were going to get sucked into it. Knew it for a fact. And I told you guys, if you were listening, I said 25 to 50. Where was the high of the move? Actually, I think it was a little bit lower there. If we look at the chart there. But I said they won't go any higher than this price. They went $10.54 over my target. Now, why did I say that? Because I knew it was going to respect the previous price. Good.
No, I was saying because it was in the range.
Yeah, it was in the range of the high. This is the high of the zone. This is the low of the zone. Period. Period. No questions. Nothing about it. That's what it is. Like, from a data-driven perspective, a bot is trading this range. So if a bot is trading this range, don't you think price has a pretty good potential to come back down and revisit these lows before it shifts back up if it's going to continue up? If the bot knows the range. I do. I think it does. And again, if it doesn't, and the bot pushes price off of this zone, if the bot pushes price off of this zone, I will be highly concerned that this is too elevated and that the bot's looking to Wyckoff this thing down deeper. Playing the bounces all the way down. It just all depends on liquidity. Can we get liquidity to wash in? Can we get it to wash out? But I can tell you this, by what I see on liquidity, right? Which would be this right here. I'm only seeing liquidity leaving, not coming in. So that concerns me about direction. And I think if we break back below our 1 trillion market cap for crypto, this thing could go south really quick. All right, let's get into BNB. Look at that. Look at that beautiful rejection. Look. Can't be any more beautiful than that. They are playing this thing all the way down. What kind of wedge is this? With a solid floor and a nice downtrend. What type is that? Starts with a D.
Descending.
Descending wedge.
Descending wedge. Typically, these go this direction. Tighter, break. Now, keep in mind, I would like to see it recapture this price. Why would I like to? Because you had this massive gap here, right? Price just shot through. Price did not get respected. Price is still, in my opinion, distributing the highs, and that's why we're getting the descending wedge. And that distribution will push in at a certain point and crush price down to the lows. And I think that will bring this RSI all the way down here to the 30s. So where's your trend? I would say your trend kind of respects your lows here, right? This is your 35 I've been telling you guys about. And if price were to get, respectful, I would say maybe we catch a bounce around 65. Maybe don't even shoot for 41. 65, somewhere's in here. This would be the trend respect. And then price could definitely ramp back up off of that. If you're looking to buy BNB. Ethereum, what's Ethereum been doing the whole time?
In the channel.
Trading the range.
Trading the range, guys. Look at that. Everybody bullish. No, it's literally just been trading the range. The bot's been selling the highs. Retail has been buying, or the bot's been buying the lows, right? Retail's been buying the highs. Retail's been selling the lows. How do I know this?
Because it hasn't broken trend, so that means people are still buying.
Yeah. But how do I know retail is selling the lows and buying the highs? I can tell you how, and I'll tell you a little trick so you can understand how.
I'm gonna guess it's the Wix.
The Wix is one, right? That's one. But the main reason I know this is because whenever price respects a range, it's because the market maker is getting the most optimal prices on the high and the low end. And the only way for the market maker to do that is for people to buy here so the market maker can sell, and for people to sell here so the market maker can buy. Does that make sense?
Yes.
They're flooding liquidity on the retail side when it reaches the high, and they're flooding liquidity on the sell side when it hits the low. And then market maker captures that.
Market maker captures it. Exactly. Yep. You're getting it, Saw. You're definitely getting it. That is exactly what they have going on here. The market maker is catching the lows. They're throwing the ball back and forth, right? So the market maker throws the ball, retail goes to try and catch it. The market maker catches it, right? And then the market maker throws it again. And then the market maker catches it. Market maker throws it again. Market maker catches it. And all retail is doing is getting all their liquidity soaked up in this current price up. That's all that's happening here. There's nothing going on other than retail is getting soaked here. It's definitely not a market maker getting soaked in the zone, guys. I want you guys to understand that. Market makers are not getting soaked in these zones. I'll show you the same thing on Google. I'm going to show you a couple other charts too. So there's a lot of charts doing this. It's pretty crazy. And typically when retail is getting soaked up in a zone, is that because the market maker thinks that price will go higher?
No.
No. What the market maker is trying to do, I'll tell you guys, is they're trying to balance their books here. And you're probably like, what do you mean balance their books? The market maker knows the market wants to continue in a direction. So the only way the market maker can do that and create the liquidity, aka buy all of your sells, is to be able to balance higher and then allow price to go lower. Now, the only way this reverses is if price balances higher and retail is able to push through the next zone and eat through all the sales of the market maker, right? Then the market maker will be like, oh shoot, I gotta grab more. The market's bullish. The market maker will pull price back and continuation. That means the market maker will sell the higher position zone, aka get a lot more liquidity, and they'll buy back in on support because now they have momentum, right? Momentum is what you need to drive direction. There is no momentum in this price action. It is consolidating a zone, deciding its next move. And as long as markets are bad, that next move for me is down more. And if markets turn good, aka a QE environment, aka the 2 year stops going to 5% and inverting on the 10-year, you know, if all those stars align, I think this is a solid uptrend. But I don't see those aligning anytime soon. Again, it just all comes back to data for me. It's not about feelings. It's not about hope. It's about just how does data look. So I can play this range. But once this range gets violated on the high end or the low end, we're going up or down, right? Depending on the violation. Now, I want you to understand one other thing here. What do we see here? Anybody?
Sorry, where was it?
What do we see on this one trend line right here?
They're building short to go long.
I would say what I see here is a weakening of retail, right? Lower highs. So when you start to see lower high wicks, it means retail FOMO is dying down on the longer end of the trend, right? So from a longer end of the trend, retail sales are dying down, or buys are dying down, and they're losing momentum, they're losing ground. So when you
Is it-
start, go ahead.
Aren't the highs, those last two blue candles higher than the one on the left?
Which one?
The two right, those ones are higher than the one before that, no?
You got to look at the high end of the trend. This is the most hopium there was, right? All this is right here is just noise. The trend is very clear. Like this angle is almost perfect on these candles when you look at it. And if price can't come back and prove higher here, right?
Basic-
Go ahead.
Sorry, so it's basically the two wicks. The wick at the left and the wick at the right is making that trend. If, like, from what
These
I'm seeing,
two.
just trying to understand it.
Yes.
That
These two are the main proponents of the situation, right? These two candles. This wick is much lower than this one. And then this wick up here verifies the biggest height move, right? This was the biggest liquidity
so
grab,
basically,
second biggest liquidity grab. And now we're going to trim back down and maybe we get a third liquidity grab. But what are we seeing that's forming here?
Momentum getting lost.
We're losing momentum, right? So as we start to lose momentum, this trending price range starts to break down. And as it starts to break down, we could be looking at moving to a lower price range to consolidate again. Does all that make sense for everybody?
What's interesting is without the market maker, I mean, these markets would be a lot lower than they are now.
Yeah, they definitely would. And I think that that's one of the things that are being affected. Had some social media, which one? Yeah, we can definitely chat on it in just a minute. I just finished up some of these thoughts. Yeah, there were higher lows. You're right. And I want you guys to understand how momentum works. Look, I'll draw it out for you guys because I don't think people are understanding. So let me get rid of all this stuff right here. So we went from a downtrending market, right? Lower momentum right here. And then we went a little bit up. And then we went down big time, right? And then we went up And then we went a little bit up again. And what are we seeing right now? What are we seeing right now?
Bouncing off the trend line.
Yeah,
Going
it's
down.
falling back below the bigger resistance, right? It couldn't even break above it like all previous height positions could, right? Anytime the market was ultra bullish, it violated this high, but it instantly got shut down. Right now, we can't even reach that high. Oh, the bottom, yeah. So the bottom wicks are kind of irrelevant at the end of the day. So I know a lot of people like to take it as, oh, this is momentum up, but you can't form higher highs. It doesn't matter if you form higher lows. These don't even matter. Because at the end of the day, this momentum is just doing this, and that can build this way all at once, but it's going to end up breaking down. It's going to reverse. Because you're still losing momentum on the top end. And you're probably like, what do you mean by that? That would be a bullish scenario. No, what that would be in the use case that you're putting it in is you're calling what we would call a pennant, right? So a pennant, if this were a pennant and it continued to form higher lows and then lower highs. So what that is called is that is called a price continuation area, right? So price moves into a pennant and then continues down. So even though they're building higher lows here, the structure continues in the direction that it already came from. So the structure came from the high to the low, so the structure will break down. Now, if a pennant is in an uptrend, like say it's coming from here and builds, then it's going to break out. That's a pennant breakout. So that's why I said like the higher lows don't matter in this case, because even if this were to form into a pennant type move, it would still be a breakdown pattern, whether this be a descending or pennant. Does that make sense? Theodore?
Yes.
Yeah, so it's a great question to bring up for sure, because I definitely want people to understand the difference, on higher lows, higher highs, and kind of how they consolidate together. Definitely look into pennants. It's a pretty strong signal too. Again, these are all percentage plays at the end of the day. Is it the reason that patterns are used is because they have a higher likeliness of breaking out in the way that they're described, as opposed to the opposite direction, right? So if this forms as a pennant from a downtrend, it has a very high likeliness. I think it's like 60 or 70, 60, 40 or 70, 30 of breaking down as opposed to breaking out, which you always go with the higher percentage trade over the lower percentage trade. Never take the lower percentage trade due to bias, because that means you're just trading on bias. You're trading on bias, you're trading on feelings. You're trading on feelings, you're going to get wrecked. That's basically just the gist of it, because you're trading probably most of the time on the wrong end of the trade and at the lower percentage trade, because you want price to move in a specific direction. Whenever you wanting something and something actually happen are two different things at the end of the day. I want you guys to understand that. I want price to go up because, hey, you can make a lot more money when price goes up, but it doesn't mean that price will go up because I want it to. All right, so that's kind of my thesis overall with ETH. I think ETH is in a breakdown structure personally, the way it looks, and that would make sense against BTC too, because if BTC were to consolidate and this were to low for BTC, it would be nice to see Ethereum break down against BTC. And you're probably like, what do you mean? Because that would then draw down the entire alt market, and it would solidify, probably the bottom of the bear.
Meta.
Yeah, we're gonna talk about Meta in just a second. Yeah, ETH is definitely, in my opinion, a short against Bitcoin. Even if Bitcoin continues up, I see ETH going negative against it, building in a negative way. So something significant that I saw about Meta, and this is pretty crazy. I think they just enticed in all the retail that they could. Personally, big breakdown to a big breakout. One area that I was watching for Meta was kind of this zone right here, right? This big trend line coming up. This was kind of like the bullish end of the trend. And what I think they've done here is they've gotten price to break just above the trend to get retail to buy the high. I think they're going to consolidate high here. And the reason I think for that is because this big roundup and this big burn up here, right? And if you look at the RSI right here, you're already starting to round here, right? So I'm thinking they hit the 50, come back to the low, and that's what drives price right back down to these lows. Now, does it mean that we're necessarily going to come back down and revisit the previous lows? Again, it's the same scenario as what we talked about with Bitcoin. There's good potential. They bounce price here, move back out. This would be a good structure. Again, it doesn't mean moonshot, back out, find structure, back out, find structure. Like that would be a bullish thesis. If not, they distribute back down to the lows, just like with Bitcoin. They're going to start distributing right in here. Price moves and then eventually breaks, moves into this zone. If it can't hold this zone, we're going to see a break, retest, and a drop back down to the lows. And then really Meta can, I think this, I honestly think this probably is the bottom for Meta, but I think we'll revisit it based on price. There is good potential too. Meta could even break right into here, right? So that's a really key spot to be watching, is that $68 zone. But that would be what I would consider the worst case scenario zone for Meta, and that would really devalue Meta pretty big.
You buy in?
Yeah, for sure. Yeah, I'm not saying to short Bitcoin either. That's been my whole thesis that we've been talking about today. It's just I'm looking for reversal patterns, really. Inverse head and shoulders, it looks like possibility on Bitcoin. If not, we revisit the lows, but probably deeper than the lows if we end up going back down. Yeah, Bitcoin's not a play for me for sure right now. I did take one at 25, took my profit. That's it. I'm out. Just because it was an obvious move for me. But other than that, like I'm only looking at, if I take shorts on Bitcoin, it's only going to be at macro highs, like really big positions. Yeah, no, Google's a tough one too. We can talk about that real quick too. I'm kind of in a tough spot with Google. We talked about ADA. We will get to Google. So we're kind of hitting that upper trend here. I think a lot of people are looking for a bounce around this 30 cent zone, and they're going to look for ADA to break up. Really, I think the structure is turning into a big distribution, just like everything else. We are already hovering the lows here where we can sit. And if price breaks below here, retest, then we're going deep, in my opinion, for ADA. I think ADA definitely still has more breakdown to go the way it's looking on the charts. BNB is a dangerous one to be shorting. Look, if you guys are not shorting BNB at the high, don't short it. Just don't. Because they love to reverse BNB and run it right back up to the highs. You need to hit these highs on the nose if you're going to short BNB. Otherwise, just don't touch it. Right, that's you can't jump in the middle of a move and take a short on BNB. You're going to get wrecked. Disney, again, this is another one of those consolidating high. Typically I'm running like 5. So another run like 10, stuff like that. You got DJs out there going 100. They'll learn their lesson soon enough since they liquidate half their portfolio. But I'm typically trying to preserve capital, not just gain wealth and preserve capital. I'm not trying to lose anything. We got consolidation high. I still think Disney comes down and revisits these lows around 77.80. SI Silvergate, again, this one right here for me was kind of a bid on a couple different things. So I want to explain this. I know I talked about a buy on this. I wasn't trying to get anybody to FOMO into my position. I'm looking at it from the perspective of BlackRock's position, as well as a few other banks that are positioned into Silvergate. I have 2 theses with this. One thesis is that they build liquidity to create exit liquidity. Price runs back up to the highs here really fast, hits these lows, and then rejects. I'll get out at that point. Second thesis is Silvergate somehow magically, again, I use the word magically, survives. They round bottom here, and BlackRock continues to invest in them to float them to get them out of this position, so that way they don't get screwed on it. BlackRock has a 7% position. There's a few other banks that have a large position in Silvergate. So if that goes down, they are going to get obliterated. It's going to be really bad for a lot of big money firms. I think there's just too much money in Silvergate to be real. But I'm expecting at least an exit liquidity pump, if not a round out and somehow survive, right, magically. Yeah, exactly. That's why I'm saying, like, you got to catch those peaks on alts. Otherwise, they're just not worth your effort. Solana, man, this look. It's crazy, man. So many people got sucked in here. Hey, buy Solana at $7, bro. I think Solana's gonna go deeper. I think they're gonna hit this $4 or $5 mark by the end of the year. If not, completely get obliterated. I think the chain has zero interest. Look at TBL, look at inflow and stuff like that. Solana is a ghost network filled with NFTs, guys. At the end of the day, I'm just being real. I know some of you may call me a hater or whatever. Like there is nobody building on Solana anymore. It's just all NFTs. That is what.
Just look at the market cap. It's dropping.
Yeah, it's like I would not take a risk on this right now. Like if anything, it's a great short where it sits. I can't see this. I mean, they could easily try and run it back up to support here at 29, but really this is a no go for me. No go. There's so many other projects I can invest in. Home Ag Group going for the goal right here, catching a bounce. I think they're going to end up all the way down here by the end of this, around that 34, 33. It's going to be bad. I've been watching them for kind of figure out the market's direction, right? Because I think, oh man, there's so many levels. Like I guess I could draw one here on a bigger time frame, but like I think they're gonna get destroyed.
What company is that?
Home Ag Group. I think housing and
It's a home builder?
yep, home builder. Yep. Home
Why-
builders. Good.
Why does it look so much different than ITA?
I think they're
Or
fluffing
sorry,
their butt.
I mean ITB. Look at ITB real quick. That's like the home builder like ETF.
Oh yeah, let me back that up.
Because I guess I'm curious because that one doesn't look like some of the other home builders I've seen.
I think there's a lot of home builders that are lying about their statistics as far as like who they have, like their investors and people that are buying and stuff like that. I've been looking into it. There's a lot of home builders who are actually had a lot of people back out of other builds, and they just find underqualified people to take the loan on, and I don't think those people will be able to fulfill the loans. So I think in a longer term, we're looking pretty nasty on the housing market personally.
Well, I guess what I'm saying is interesting is that, you know, this is like your general home builders ETF. And, you know, that one that you just showed is clearly like on a relative point of
Downtrend.
view, like, on a downtrend, but like from a relative perspective, like significantly underperforming as well. So I'm wondering like fundamentally what's going on there.
I think this one's done too. If you look at this from this perspective, let's see, high to low. Yep, perfect. Okay. So if you look at this right here, and yes, this is not a massive amount of time frame here. Well, basically about a year. You got a bearish div going on right there, and I think this will end up being a lower high. And I think a lot of these are looking to go this direction.
I think so too. You know, right now we're not at the point yet where, you know, when like interest rates going down is like considered like where it's like going to be like a really bad thing. Like there's going to be a point in time when like rates are going to be going down, and it's because something's like really bad. And people, it's not going to be a buy. It's not a buy signal for anything outside of buying bonds. And
100%.
And since we're not at that point yet, you know, we just saw before this recent, you know, ramp up in rates once again on that, like, I guess on that bond rally, anything that's rate sensitive was just caught a huge bid, and housing went vertical on that. And that's what you saw, like, I guess what you're seeing in that lower high that you're showing right there.
Well, you're actually right. So like you do see it even on that Home Ag Group. Let me go back to that real quick. So if you look really closely,
is that on a daily, this one, or are they both on? We're
This on a
looking at
weekly.
both those on the same time frames.
I think the ITB monthly. Yeah. So this, I was looking at this on a monthly. Let me switch this over to monthly real quick. So if I go on a monthly, that's what this kind of looks like on a monthly. So this is already kind of, it's a little bit ahead of that ETF, right? It's already formed that lower high. It's already broken structure. It's coming back up to retest. I think it caught a little bit of a bid here, just like you were saying. And I think that's going to be a breakdown, right? And come back down and revisit these lows.
What's that ticker? I'm going to add that to my list.
HG1.
HG1.
Yep. Definitely a good one to watch. this is what I've been watching to kind of vision, because these guys have been kind of leading this downturn of the housing market. They're getting obliterated. So I expect when these guys bottom, we're going to be looking at bottoms for a lot of the market. And really, I'm looking for that bottom. There's a clear bottom right here, right? It's just a very clear bottom. So that's the price that I'm looking for them to hit. And I'm going to start watching other housing companies and as well as construction too. I'm looking at construction companies, construction builder or home builders and so on and so forth, and be looking to invest in them probably on these lower ends of the chart. Because I think that'll be the bottom of the market. And I think bonds too. I think now's the time to get into bonds personally. Like if you're not in bonds right now, I think you'll be late to the game later. I think that 5% target's going to be the high of the move. And we'll talk about that too when I open that chart, but that's just my perspective on that.
Yeah, I can speak to that as well, because I've actually made some recent moves in bonds I can talk about as well whenever you get to that. So just let me know.
Okay. Yeah, we're gonna jump to bonds here shortly. Let me just run through a couple more charts and then we'll keep on pushing forward on that conversation. Google, like you were talking about too. I know you said you were short on this one. So I do want to kind of point out with Google, and this is something I want to be really adamant about. And I brought this up in the spaces too, because I think Google's a great driver as well as the SPX of the or kind of front runner of the SPX, right? When the SPX makes a move and Google makes a move and all that good stuff. So I want to kind of talk about like what Google's been doing here. So Google overall has been kind of doing the stair stepping pattern, right? And then it starts to lose momentum on the right before it starts to drop to the next zone. And really, I think Google's on that path over here. It started to do the same thing and then broke again, lost momentum. Now it did catch that height move, right? And you'll see that every time, like it does this big run up before it drops. And really, what did it do here? Right? It ran all the way back up to this is like, I call this a stair stepping pattern, right? So this is kind of like your stair 1, and this is your stair 2, and then this is your stair 3. And really what Google's done here is it came back up to the previous stair, rejected immediately on that stair, came back down into its consolidation zone. And I think it's on that trend, like you were saying, to that short position. You just got to be careful where it sits at, but I think this is okay. Yeah, this will be okay. Because I think the mid mark is the high of this zone, right? And that's kind of where we're at between the high and the low, is we're kind of coming up to that mid mark now. It could go a little bit higher, maybe up to like 94.65. I'm expecting this thing to turn back down and step down again to a lower zone, right? And consolidate. And when you look at Google from that perspective, like you got 1, 2, 3, and you're looking at a fourth move here. And when you're looking at a fourth move, man, this looks really bad on overall markets. And really my step down is really kind of looking at this zone, but I'm going to be real and say it could step down and consolidate this too, right? Maybe not even come back into that lower zone. So that's why I kind of pulled the high here between 74 and 81 is where I think the next consolidation zone will be. But it's been really clean on this just straight move across, drop, straight move across, drop, straight move across, and I'm looking for another drop on Google. So I think you're right on that one. Probably a little bit ahead of time. I think they might try and pull some more liquidity here, but I think we're probably like at most a month out from before Google takes this next lay down. What are your thoughts on that?
I agree with that. I covered it like a week or two ago, and now it's finally kind of moved off the lows somewhat. So I'm probably just going to see what happens next week. If we get a good pop on the first day or two of next week, I'll probably add it back. And
yeah, I would be taking it. I would be looking to take a position sooner than later. I think we are now. Again, one key point that I want to point out here, and this is something I think people should really take a look at, is look for patterns, right? And Google has a really good pattern of making a highest move before it drops, a highest move before it drops. And I don't think you can get any higher than that, right?
Yeah.
So I think we're looking at another drop here.
Yeah, I'll probably generally, when we've got these like whether it's a Friday sell-off, it's kind of funny, and I don't know if this is just coincidental or what, but the behavior that I've observed is when you get these massive sell-offs on a Friday or a massive rally on a Friday,
it's going to close bad, or not close, but it's going to open bad on Monday.
Well, no, on the Monday it usually at least opens and not always, but usually it at least opens in the direction that it was headed Friday afternoon. Not
Yeah,
always.
you
but-
got that momentum. Yeah.
Yeah,
You're
it
keeping that
usually,
momentum rolling.
and then you either like on the open, you can kind of dip your toe in and you short, you can start like either like
Taking
in this,
short positions.
yeah, in this case, the direction's predominantly been short, so you can short. I don't like trading like the open at all. I always like trading the close.
Mhm.
So but like on a Monday or a Tuesday following a move like we had this last Friday, that's when I'll take shots at the open if like you get an open of like up 1% or up like 85, like 0.85% or something big for the like the major indexes.
Yeah.
But yeah, I'll probably be looking to if that happens on Monday or Tuesday, I'll probably be looking to at Google's one of the top ones on the list. And the reason why I bring up Google versus Meta is because I guess one thing I'm trying to do a better job of is to have, long and short ideas to go against one another, right?
Mhm.
And to do that, sometimes it's best if they're in the same kind of category. And so in terms of sector wise, Google and Facebook are both communication sector. So if you had to be long one and short the other, I guess what I'm saying is that based on from a momentum perspective, Meta, at least over the last 3 to 6 months, has the momentum on its side now, and so and from that perspective, bullish over.
I mean,
that.
kind of, but I feel like Meta is it's just moved too much, right?
I agree with that, but I guess I'm just talking about from the momentum perspective. If you were to choose to be long one and short the other, Meta's the one with the momentum and Google's or the positive momentum and then Google's the one with the negative momentum. And from a fundamental standpoint, you have Meta whose data, was one of the first to deteriorate, and they have some easier comps now, where Google, it took them maybe an extra quarter to start getting some of that deterioration that Meta saw. So Meta kind of bottomed, or at least local bottom before a lot of other things, because they were one of the first to sell off, basically. But,
when you get a flush out, which is what I consider this, right? This is just a massive flush out on a higher time frame. You're going to get a massive move off that flush out. And really, just like you're talking about the momentum with this, that's what I'm seeing possibly happening with Silvergate, even with the horrible news, man. It's been a rinse and repeat with these things, man. Like you ignore them because you're like, oh, they're screwed, and then all of a sudden, oh, we're AMC and we got all this money from investors, and we're going to dump it to them, and we're going to restructure our companies, and we're going to make it all better. And then you get these ridiculous pumps off of those lows. And that's what I'm looking for, even with Silvergate. Like, I'm looking for them to build exit liquidity to take that thing down. Right.
That's fair. Yeah. And by no means, I don't think that I'm going to be getting long Meta. So I don't want that to be interpreted as me being long Meta, but it's more of just like if you're looking from a long short perspective and you had to pick one on each side, that I was saying that.
I would honestly say they're both short. And the reason for that is, and I want to point this out, is just looking at price action over here on the left and looking at price action right here on the right. Like, we are coming up on that resistance, right? And not only to mention that resistance. Now, granted, it'd be better to take it from the high here if we get to 200. We had the price push up to here, and then our closed here, right? So because our wick is so much higher, I do think that they will try to build back up to that wick, but I think this is going to turn into a distribution zone. So just like it was over here. So I would look for a short in here, but I think it's going to be longer term than what people think. Could be months out.
It might be one of those where you've pointed out a lot, where you see the candles start to get smaller and smaller.
It's that momentum trade, right? The momentum was high here, and that momentum starting to slow at a resistance. And whenever I start to see momentum slow going into a resistance, I don't expect a breakout. I expect a distribution. This is where the market maker marks price up and sells at the premium price, and they're getting 10 times the amount of money they were getting down here. So Now they just sell all the way through here and they can technically just take price back to where it was. And there's no losses on doing that because they made so much money up here holding price here for so long that dropping price back down to the lows doesn't affect them, even if they had to eat all that as liquidity as a market maker. Does that make sense?
Yeah.
That's one of the key things like I've been looking at. I think a lot of the market is shorter than people think. I think the whole market just about is short. I just think some things can still bid, right? They're short, either long-term or short-term. It's just that some of them have room to bid higher. I don't know if all that makes sense. And those of you know that bid, it means that the market is willing to buy it up. And they'll continue to buy up to resistance, I think, for a lot of these for a period of time. And then that will start to slowly show itself on bearish divs and stuff that, that price is not a price zone where price is going to break out, but it's more of where you're getting sold into and momentum will start to be lost and price will come back to previous support.
Well, one thing you did have is you had a lot of people might not be as long as they were, or sorry, as long as they were, and they're probably shorter now, but coming into like February 2nd, everyone had gotten long.
Yeah. And that's the thing too. You're going to get a lot of long positions up here too, because there are just so many people that have bad trading habits and they like to do breakout trades, right? And when you're in a bear market, a breakout trade is the worst trade you can make. When you're in a bull market, a breakdown trade is the worst trade you can make.
Yeah, no,
So-
seriously. Yeah. I remember that. That was kind of the theme of when we were kind of navigating those that last month of the bull run, or last like quarter of the bull run. And you had all these people coming out of the woodworks calling for these breakdowns on the Evergrande stuff and all that kind of news. But they did
just
that
kept
all.
ripping.
They did, yeah, I know, but they did that all year. It's like anytime the market went down, they tried to make the breakdown call.
Yep.
And it's almost like that type of behavior in itself is it's like its own signal. When you constantly have people calling for breakouts in a bear market, it's like, okay, I guess we're still in a bear market. But when you have people constantly calling for breakdowns, it's like, I guess we're in a bull market.
Yeah. And what I'm seeing across a lot of the spaces that I'm looking at is I'm seeing way more breakout and it can't go any lower. So you got 0 breakdown trades being initiated. You got all breakout trades wanting to be initiated because we're
Yeah.
sitting at resistance. And that's the worst time to be a bidder, is when everybody's screaming, we're going to break out.
Yeah, that's what I was about to say just a second ago. It seems like just as soon as everybody starts saying the same thing, that's when the market turns direction and goes the other way for a minute.
Yeah. And sometimes it may seem like you're on the wrong side because you are on the side of the right trade, right? Like sometimes you're saying, oh, it's going to break down and everybody else is saying it's going to break down. And then all of a sudden, out of nowhere, everybody says it's going to break out, right? But you continue to stick to your thesis because you know which direction the market's moving. The biggest, I think, sell call for me at 25K was when I watched like literally 80% of the bears I typically follow turn bulls. And when I saw that, I was like, oh, this thing's done. it's going back down.
Bro, I saw like in so many cases, it was like, oh, we're above the 200 moving average. We're in a bull market again. I'm like, okay.
Yeah. When people start calling for bull markets before the halving, I love it because you're in a rally at that point. That's just it's the obvious part, I would say, of the trade a lot of the time, and that's not emotionally driven. It's a little bit of sentiment, right, guys? I obviously match price action with sentiment, and then it gives me the better percentage trade. And I've showed you guys many times today. I went through charts and I've like, hey, this is the bullish case. This is the bearish case. This is the sideways case. And I've tried to break it down in many different directions so you guys what'll happen in every type of move and how to validate and invalidate moves. And through all that chatter and stuff like that, that's typically what I'm looking at. I'm looking at my moves and I'm looking at where we're at in the move and what everybody's saying where we're at in the move. If everybody's in disbelief that we're going to go above 25K and that we're going to hit 30K, we're probably going to hit 30K. But I had all these 2s and 1s and 20 follower people telling me how we were going to hit 30K. And I'm like, you have no clue. And you're probably like, what do you mean they have no clue? I have 20 followers. The reason that the average 20 follower, 10 follower people, and it doesn't mean that they're little or beneath me or anything like that, is because those people are what we call consumers, right? They follow more people than they have following them. That means they're looking for advice. People that are, we'll say, creators, or people that are not consumers, but they are basically, I would say, let me think of a proper word for it. I guess we'll just go with creators. We'll go with creators, right? So people that are creators, or people that are, don't follow the trend, or have their own thesis, or have their own process, they don't need to follow more people than they have following them, because they come up with their own process, and their process works for them, and it works for other people sometimes. And that's why they typically have a following, right? And that's not to say everybody. There's a lot of bad actors in this game that pay for followers and everything else, I think, too. And in those cases, those people can be very deceiving to your average person. But overall, I would say, when you look at it from that perspective, when you have all the consumers telling you where price is going to go, typically price is not going to go to the consumer. That's like all consumers coming out and be like, oh, we need $3 gas. Well, guess what? The gas companies don't care if you need $3 gas. They care about their profit margins. If it fits within their profit margins, they'll give you $3 gas. If it doesn't fit within their profit margins, you're going to pay whatever they tell you for price. Do you see how this works? I guess it's a yes. But yeah, that's typically the way I look at it, guys. It's like, price isn't always going to match what you want, but at times, sometimes it will. Sometimes it will. So you're not always on the wrong side if everybody's screaming the same number, but there's a good amount of times that you will be. Again, so Adobe, longer trend trade, running up. I mean, this is a solid, I would say, long trend trade for Adobe, guys, like a really solid one. And I could really angle it a little more. I'm looking for Adobe to continue to come down, right? I'm looking for like 217, 224. I think we're in a big round. I mean, this is like basically a half circle right here. I think we're in a big circular rollout for Adobe. Now, granted, it could start rolling out up here too, right? This is a good consolidation zone to be watching. It's above a previous, and it's within a consolidation zone currently, and it's got a high and a low. Again, you don't buy here, you buy the lows, right? So you got to wait for price to come back down. And if price continues to trend sideways, it will hit this trend and round off. So it doesn't necessarily have to come down to 220, 200 if it continues to roll sideways into this trend. But basically, when this long-term uptrend starts to hit with price, that's your ideal place to be looking to catch a bid, right? That'll probably be one of your lower positions. We're currently below the 50, which is very bearish on the monthly. And we got this long-term trend right here that I'm seeing that we're just kind of following down, right? I think if we hit the 30, it's a buy wherever price is. And that's kind of how I'm gauging this. So I got two different scenarios. One is we hit the 30, I'll start buying. That'll be my buy position wherever price is. Two is we start hitting these lower zones, or we hit this long-term bull trend right over here, right? We hit this long-term bull trend, that's a buy for me. Those are the two kind of conditions I'm looking for Adobe. But if you get in an Adobe at like $200, I think it's an amazing position on Adobe. I think Adobe long-term is going to do well. They're one of the best products out there, I would say, when it comes to Photoshop and video development and cutting and all that stuff like that. Like, they are the most used by retail and commercial when it comes to those. They have the best software.
And
So-
have been for 20 years, right?
Yeah, 100%. Yeah, they've just been dominating that market. There hasn't really been a lot of competition in it. There's free softwares like DaVinci and stuff like that, but just Adobe just does it so clean, so simple, and so easy. It's just the facts. It's one of the best softwares out there.
I
go ahead.
use Adobe every day.
And I think it will continue to be used. I would say too with Zoom, I know a lot of people said Zoom's going to go out of business. I've noticed more and more government use with Zoom. So that's kind of caught my eye. So that's something I'm kind of watching actively. I don't have the chart up. I'll probably look at it at some point, but that's my thoughts on Zoom. VRA consolidating the high. We did break above the previous high, kind of sitting here. That was a strong rejection. I don't know if they continue to stay here or continue to break down. This looks pretty bad. Not really interested in this right now. VRA's veracity, for those of you who don't know. So strong downtrend, filled the wick, came back up, hit the high, rejected the low, came down. Looks like it wants to come up and retest the bid. Now, here's the thing. With a retest, we're not going to see strong downtrends anymore. So once you start catching retests, if it just breaks through, that's a strong downtrend, right? You expect price to come back. So price went up, came back, right? Now we're starting to see this. Now, if price continues to build here, this could break out. Otherwise, price will come back up, retest, and then come back down to the previous trend. But we're not going to see significantly lower lows than this from here on out with Rumble, in my opinion. The way this is looking, this is a solid consolidation area, consolidation high, consolidation low. Just watch it from those two positions. Again, over here, consolidation high, consolidation low. This is a good consolidation area for Rumble. It's somewhere to watch price. I think this is below their entry prices, so this is a really good position to be taking. Keep in mind, it does have price interest all the way up to like $20. Could it break higher? Sure, but I think these wicks will get filled sooner or later. So I think this is a good buy for like a longer term play. Shop, again, it's another one of those. A lot of people build businesses on Shop and stuff like that. I think it's really good too. I like how they're coming back. They fell down, flush out, right? Flush out move, came back up, hit the resistance. Looks like they pulled back, wanting to come back up and retest. Strong uptrend. I don't want to deny that. So there is potential to break out. But I think that we might catch a retest and a drop. That's my perspective on this. I think most markets are looking to come down as opposed to break out, but I don't want to ignore the uptrend that is visible here, plain as day. And so you have both scenarios here. If you continue to follow the uptrend, you got a breakout potential. If you don't continue to follow the uptrend, you'll retest, you'll come back down, you'll break this trend, and you'll start to trend back down toward the lows here, and possibly maybe step down again. Again, right now we're in that stepping pattern for Shop, just like what we were in Google. This is your stepping pattern. And then we're looking to either have price break to the next step, which would mean that price will break up here at the highs. Your high and your lows right there. That means price will break back up to this step and start consolidating up here, but it needs to get above 96.31 for that to happen. Otherwise, it'll come back up, hit here, come back down, reject below, and continue consolidating here, right? If we start getting moves that push up and get rejected back down to here, we're going deeper, 100% going deeper. If if Chop goes up here, catches a wick this big, and starts to trim back down, I can almost bet you it's looking to consolidate lower. And that will be really bad. Gov bonds, I called this move. Now, granted, I hope we hit 5%, so I was right 100%, but maybe I'm off by a little bit, But I mean, you were there, Aaron. I called this at 221, guys. Or I think it was 2.01% when I was like, this is going to 5.
Dude, I don't know why we just didn't leverage a short on 2-year notes.
Bro, I could have made so much money from here to here, man.
Yeah, next time I need to learn how to trade bonds better.
Oh my gosh. It was so odd because we were kind of coming up here and we already broke above the major resistance, right? And that's what I was watching for. I was watching for that major resistance move. And as soon as we got above that, which was really down here, right? And then the market, you can see right here, it just
What
broke.
month was that, by the way?
This was March of 22, as markets were tanking, right?
Yeah, that was like the dagger.
And you see this move out on the weekly, you see this pull back to the 200 MA, and then it just rockets. And then it comes up, everybody says bonds are done, they're rolling over, everything's good, and then bonds ramp right back up again. And I knew they would because this higher consolidation area was pretty obvious.
Sam, that trade, I don't like, I don't, I mean, again, like that was one trade I was like really adamant about the fact that, you know, you had the 2-year note trading down towards like sub 4%. And the Fed is clearly was clearly telegraphing that, you know, we're going to have a 5 to 5.5% terminal Fed funds rate. So the market was like very mispriced from a 2-year note perspective.
Well, they were all thinking we were gonna do like 2 or 3% increase.
Well, I
Everybody
know,
was
but
on
I'm saying
board
on
with that.
that last consolidation where we had the markets kind of rally off the lows on the pivot trade, but that's no longer intact whatsoever because, you know, the 2-year yield just made a new high.
I feel like it was never intact. I just think people were just saying random things that they could just come up with. There
Well,
was
I'm not
no,
saying I guess I'm not saying it was intact, but
Yeah.
there was enough people got behind it to
100%.
start
Yep.
buying 2-year notes down to 4%.
Well, I think what had happened here is a lot of people they didn't I don't think it was like a lot of people getting behind it. I think big money kind of pushed that, right? And that's really what I think happened there. I think the narrative got pushed out, the news got pushed out with the narrative, and I think that was paid news. And then everybody got on board, right? And then retail got in at the top and they ate the whole thing all the way up. And I want you guys to understand my thesis for this breakout here, right? And I'm not saying that you know, that you were saying it was intact. What I'm kind of saying is like a lot of people did. A lot of people were telling, look at the money, look at this, look at that. This is why prices are going up. They ignore the Fed. They don't care. If they didn't care, price would have never came down. Right. And that's what a lot of people got to understand is like, you can't feed into those narratives when you start hearing that stuff. But I want you guys to understand my thesis here for bonds and why I thought the breakout would occur here. You got the 200 monthly moving average right here, right? Crossing. You got support, resistance, support, right? Price barely broke below here. Last time it got below here, it did what? It reversed back up to the high, aka forming a lower high, of course, and price was then going to break out. What else do we have here? This was what got me in on 2.1, right? So I looked at the high end trade right here, and I was like, if they get above here, they're going to come all the way back up for this liquidity right over here. I was like, that's exactly what they're going to do. And so I looked for the 5% move all the way from 2.1 over here, guys. 2.1. And I posted it on my Twitter the other day. And as soon as they broke above this, I was like, all right, going, it's going. And it's just been climb. Now, here's the thing. These are strong moves. What are we seeing here?
Slowing down.
It's slowing down. So one thing you got to understand with bonds is bonds tend to slow down and then they start to get bought up. When bonds start getting bought up, what do you think happens to the market?
Goes down.
Everybody's leaving the market to go into bonds.
Yeah, market's screwed, guys. It's just screwed. And here was the crash from 07 to 09. The bond market took a rip down. And if you look at the crossing pattern here, that would basically be a retest of where we broke out. So the second we retest where we broke out, that'll be the bottom of the market. And then the market will continue to buy bonds back down to the lows of where I think a couple different areas. I don't want to be too biased, but one will be here. Strong support, and one will be all the way down here. It just depends on how bearish the market gets. But the bottom of the market will occur here. It won't occur here. Just like it did over here.
Yeah, but it also really depends on how much they cut rates. Remember that the 2-year yield's basically the reflection of the Fed's policy.
Yeah, 100%. And if you look at it timeline wise, this is 2026, right? So this obviously gives them plenty of time for this thing, for these things to work out. Now you're probably like 2026, we're gonna go down to 2026. No, I think we'll probably have a mini bull up here, right? Maybe bringing us back to all-time highs, if not, a mid market. And that'll be, crypto's bull market. And then the stock markets will be rallying back to the highs. And then at some point that starts to turn south again, and that's our new bear market. That's what I think is going to occur over here. By the way, this is just building out, right? Again, this is all just a thesis at the end of the day. It has to play out to be true. But for right now, it's just a thesis.
But yeah, since we're talking about bonds, so the one thing that I here just type in MOVE. So this is the one, it should come out with the move index. So this is your like bond volatility or your VIX for bonds essentially.
Interesting. So I kind of overlaid it here and look at it. It's actually it's proven exactly what I was saying with this kind of probably being the top. Because look.
Yeah, so basically, as we've talked about, when volatility is breaking out for the underlying asset, it's bearish for that asset, bullish for the volatility. When volatility is bearish, it's bullish for the underlying asset. So notice how on those large down moves in the yield, you see that orange line trending down in a bearish formation. However, as we've seen the rates and the yields ramp up significantly, that orange line's been in a bullish formation alongside that. And you've kind of seen the bond sell off in line with, a ramp up in bond volatility. So bond volatility being elevated has made me cautious to get heavier into bonds because it's still kind of trending higher. But I have started allocating some funds to bonds at this time in my long only account.
Yeah, I again, just basing it off of previous price action, I'm not gonna lie, man. I think I 100% think if you're not getting into bonds now, you'll get in late. And that's just based off of where we are in the chart, right?
Yeah, I was able to take, because I had like a small, because my 401k is super limited to what I can be in.
Mhm.
And so when we got to like very early February, when we had bonds selling off and stocks selling off at the same, or bonds were selling off, but stocks were rallying. You had, the Russell 2000 small caps kind of peak out. I actually sold that or traded that into a bond fund at that time. So I basically traded small cap stocks for bonds.
Yeah, and I know some of you are probably like, ew, bonds, why would you invest in this? Waste of money. No, guys, it's a way to preserve. That's exactly what it is. And these rates, this is not something that's going to be around. Like these rates are going to disappear, I think, just as fast as they happen. And then people are going to be, right back to buying, at percentages of a percentage of a percent. And that's just the worst environment to buy bonds, to try and allocate or have money in them.
Yeah, I
It's a
mean,
great
it's
way to offset. I'm sorry. Go ahead.
or no, you go ahead. It's fine.
I'll say it's a great way to offset interest rates on when you purchase a house too.
Mm-hmm. Yep. Go ahead, Aaron. You got something to add?
Yeah, no, I was just gonna say it's more of a hedge, right? It's not. I guess it's better to think of it more as a hedge than anything, because if you can buy a bond right now that you can buy a 10-year note that's yielding, almost 4%. And so you're getting you can get a 4% yield, or not even just that, you can go into a bond fund that replicates, so you don't even have to worry about trading actual bonds. You can just go into a bond fund that's giving you a 4 or 4.5% yield, and it kind of acts like the underlying bond itself. So if you do actually see rates fall, then you're not only getting a 5% yield on top of your underlying, But if you do get, like, if bonds actually do rally, you also get the upside return in like the bond appreciation if the rates fall, because you bought it at the right time.
Yeah, it's a win-win situation in my eyes when it comes to bonds, especially when you're looking to balance your portfolio.
Like,
Where-
look
but,
at TLT.
So which
What
one-
amount of money would you consider worth investing in? I mean, like, is there a minimum? I mean, in my opinion, I think like at least 100 grand, 200 grand.
Well,
I mean, again, it
I
comes
look
down
at-
to your capital, but
yeah,
go
I
ahead.
look at it in terms of percentages. So,
Yep.
ahead.
I would like bonds generally have a lower level of volatility, not necessarily right now, but you can, in an asset allocation model, you can take a bond allocation up to like 10% because of the volatility profile. And it's, if you're buying US treasuries, it's risk free. You get a yield.
Right.
So,
Right, but to keep that money put away, like it's like staking it, for example, in the crypto world, right?
But
You stake it for
guaranteed
2
money.
years, and but you won't be able to get it out, or you get penalized.
We gotta
right?
wait for the maturity
Well,
date to hit.
Right.
if you're buying actual bonds, or you can buy ETFs that mimic bonds that give you a monthly dividend, and you have full liquidity.
Okay.
Yeah. You can move in and out of those really easily too.
Right, but then that'll follow the interest rate, wouldn't it? Your dividends, it would go up and down depending on the interest.
You mean the ETF? It'll just
Yeah,
follow
Yeah, the
it,
ETF, yeah.
That would probably be the case. You'd probably be forgoing a certain level of interest for the liquidity.
Yeah.
And again, to get real money back, like if I'm going to put it in for 2 years, 100, let's say 50 grand, and put it in for 2 years, well, my return will be what, 5% of that on each year, compounding monthly or compounding quarterly, whatever, right? So I looked at the math, I did the calculations, and it's not. I mean, you can do more with money in hand sometimes, if you're.
I mean,
a hustler.
yeah, that's really what it comes down to, right? Are you a creator or are you a consumer? If you're a consumer, you're better off in bonds, right? Because you're going to
Right.
put that money in bonds, you're going to leave it there and you can't touch it, and you're not going to consume that money. And then on top of that too, it's about, again, wealth preservation, not wealth growth. That's the thing with bonds that people got to understand is
Agreed.
you're staying ahead of inflation, because inflation typically runs at 2%, right? So you're ahead of inflation. And not only are you ahead of inflation, your capital is in a place where you will get that money. So like
Exactly.
those type of things, again, and it's also about balancing your portfolio, because you're probably taking on risk in other areas in what you're investing in. So there is going to be downturn with that, but that 5%, residual that's going to keep coming in on your bonds. That, yes,
Guaranteed.
you can't get your money out, but it's guaranteed. Will keep your
Mhm.
portfolio more well balanced than your entire portfolio jumping 20% a day and then dropping 50% another day because of all the volatility that's currently happening.
Yeah, I mean,
So
I think
allocation should be a good percentage, like maybe 20%, 30% of your
I think
portfolio,
Aaron's
maybe?
kind of on point with like 10%, right?
I
You
would-
still
yeah,
want some
10
volatility exposure.
yeah, I mean, I would say 10%.
You can still go into stable stocks per se, like things that just only up, but they're really low growth. You can go into those to balance even more, and then on top of that, and then you could start going into risk, on the lower end percentages of your portfolio.
Yeah, I
Right.
mean, and I say 10% is like, if you wanted to, like, you could buy TLT 10%, IEF 10%, and then you're long, 10% 10-year treasuries, 10%, 30-year treasuries. But at the same time, then you're allocating, it's the same trade though. So, I mean, I would stick with just like going with one or the other at like 10, I would do like 10. I'm going to do like 10% at some point.
Plus you have to keep in mind too, like you said, like your percentages will fluctuate with ETFs, but your money's liquid. You can take it out anytime you want.
Yeah.
So like there's really no risk in going into a bond ETF that's following the current percentage yield. And then once you get that yield, if the yield starts to go down significantly, just pull your money out, put it somewhere else.
Yeah, exactly. And because and that's, I think, I mean, I like that better personally because, you know, I'm going to be getting a yield on it while I hold it and wait for it to work. But then, you know, I'll have liquidity to be able to sell it because at a certain point, you know, if we start getting rates really going down because like stuff's in the fan, you know, you want to have like, you'll be making money on the rates going down on your bonds. You can sell that ETF and like in profit, cash out, get that liquidity and put that capital to work somewhere else where where it's really getting like the market's really getting sold off or panicking. So I guess that's the trade behind that. I mean, and another thing you can do is, I mean, you can start rolling, you know, T-bills, which, you know, if you like, you can do like 1 month or 3 month, like it's like literally a 1 or 3 month bill, and then you can get, you know, 4 or 5%. And that's another option as well. If you're looking to have some type of like guaranteed yield without being locked up for like 2 years, you can do the T-bills, but that'll go away once rates get cut. But until that happens, you can keep rolling with the T-bills.
Yeah.
Yeah, that looks like a double top right there.
What's up?
That looks like a lower high.
Oh, over here? Yeah. That's what I think is happening on this. This is the construction ETF though.
Yeah.
Yeah, well, look, if you don't mind, look at TLT real quick, because that's like your 30. This is like your long duration bond index.
I think I have it on here, maybe. Let's just. A lot of people were trying to go TLT. Yeah, I do have it. TLT in 2022 got right.
Oh yeah.
Oof. Yeah. Yeah, that looks nasty. I mean, to really, that's a solid floor, in my opinion, right there. So, like, to go deeper than that, I mean, a possibility, but like this thing, if anything, it's going to solid high, solid low here. And then eventually break out of this. And I think it'd start moving up.
Yeah, so this is gonna, if you're looking at the actual bonds while you're trading these, this one's gonna correlate more with the 30-year yield.
Yeah, the 10-year is like way up there. It's not too far off from 2007 highs.
The 10-year, it might be near it, but the 10 years is actually still making a lower high right now, technically.
Yeah, it is. Yep. I just drew a bunch.
Technically, I mean, we'll see if that holds or not, but
yeah, I don't like when they close like that. It makes it really sketchy.
Yeah, I mean,
when the market doesn't want to shove through with force, right? If it doesn't shove through with force, it makes it really sketchy on whether or not they're gonna move up higher. To me, what I'm seeing is a move, a shift up, a pull back, a shift up, and a rejection at the highs here. This 4.13 now here's the thing though. This could be a longer term play that pulls back to support and comes back up later. Right? So we always have to keep that in mind too. Usually when you start getting these topping patterns, price likes to range and then shift high. Right? So
yeah. No, I mean, I think that could be, I mean, we could be in a structurally different rate environment.
Mm-hmm. But if you look at 10-year, like this is a make or break situation, right? Either it breaks this trend from 2020, or what is this? 2020 all the way to now and breaks out of it and then structurally changes, or it continues to push this trend. But this trend has been just so bullish, right? To the upside. So it's just like at some point this has to cool down. On that 10-year. Like look at this move and look at every other move for the 10-year. it's never structurally moved like this. It's already in a different environment in itself. So like this is what I'm watching, but like I don't know. It's too hard to tell right now. It just way too difficult. I think too early to tell the direction for this. I think it needs us a good amount of time left in it, like probably another year before you'll be able to actually tell directionally which way this thing's heading. Because if you look at it from this perspective, it's going to pull back in 2023, then pull back up in 2024, maybe even go out to 2025. Like, or it's going to break here in 2023, 2024, could probably come back up, retest in 2025, and then maybe come back down to the lows here. Like it's a hard one to tell where it sits at. There's a strong support in here, which is currently a strong resistance over here, right? But if price needs to either really shove through, or it needs to consolidate, pull back, and then shove through really hard, or it's going to break here. Like it's a really difficult play to take, I would say, the 10-year.
Depend on the economy too.
Yeah, and the economy can drastically change the direction of this thing. Depending on where we're at when we're at these range highs or range lows. So, man, like I wouldn't hedge any bets on this. I'll just follow the trend until it breaks, and then once it breaks, we'll try and figure out where it goes from there on this one.
Yeah.
I was looking for a breakout here, but it looks like it's hesitating. Go ahead.
Yeah. So, yeah, no, the reason why I bring that up, because you have the 10-year is like, I mean, it hasn't made a higher high yet, but it's kind of, it's gone up a bit more than 30-year. If you look at the 30-year, it's not gone up as much. So like you're starting to see is like the curve, the slope of the curve, like the long end is starting to go up less. So the 30-year being the longest duration is starting to go up the least amount. And then, the 10-year is going up a little bit more than 30-year, but not as much as like, your 7s, 5s and 2s.
That's a nice bounce too. I mean, this looks almost similar to the same run up on the 10. Look at it. Just like up only type moves. Like that stuff sketches me out. I mean, there's so many angles you could take this from. It really does though. Like I don't like V shapes, because V shapes usually end up coming back to recover all the move. Look, the 30-year has been in a solid neglect, right? And then all of a sudden people are buying 30, or not buying, but they're bidding 30, just getting out of it. So like that doesn't make any sense. Like people have been buying the 30 for long periods of time in a solid trend, right? And all of a sudden now we got a full reversal sell out of the 30. Like this, to me, this is a longer term scenario that we really have to be watching the markets in the coming years, like 5-10 years, I would say, because when you get drastic shifts like this, this is what I consider like inflections, right? We've got an inflection point now in the charts. We broke previous highs, and we are now at an inflection in the chart where does the chart start going the other way? Does everybody sell out of America? Does everybody sell out of bonds? Does everybody go all in on businesses? Everybody going on corporate America? Like what is the inflection here to force this type of price action from 2020 to now? Yeah, and again, I don't have an answer to that. I just don't. I'm just being real with you guys, but like,
that's a good point, though. That's a good point.
These are key points to be watching money and how it's moving. Because here's the thing, I think money is shifting in the way it invests. And that's why, like, I can't tell you guys, hey, go all in on tech, go all in on EVs, because I think money is moving in a way it hasn't moved before. And you can see it in the chart in these yields, guys. Like these bonds are showing that money is changing. I think it's inflation related too, 100%, right? It just, I can't see inflation being the only driver of this, right? I think inflation is a driver, but if it's purely inflation, then that would mean that inflation is the worst it's ever been in history.
Well, it's growth and inflation. You need to remember that, the longer end of the curve is reflective of economic growth, and in more of a rate of change format, that is. So
Yes, and I agree that that's the point I'm pointing to more is the rate of change and
Yeah.
growth. Right.
right. So, we went from negative, severely negative growth during the pandemic to, extremely positive within like a year. Right. And so we had some of the craziest growth rates and, just profit accelerations for so many companies that I mean, that's probably part of it. Right. I think year over year, GDP was like 14, something like 12 or something crazy like that, like on a year over year basis. And so that type of, that's just like unprecedented growth, like on a rate of change basis, at least.
Yeah, and I completely agree with that. And that's what I try to tell people too, is like in that perspective, because the amount of growth we saw coming out of COVID, like this is every move gets rebalanced, right? So to me, this is like an up only move that's going to result in a, volatile type market, like something like that, or even if it's a higher low, even if it's a lower low, right? Like it just the market's out of whack now. So like we could see before we see stability, we could see many more years of just this ridiculous price action movement before it starts to tighten again. That's kind of what I'm kind of more pointing to, right? Is like I think we're kind of in that upper range where we could really see some drastic moves on a lot of assets to the downside and or maybe even a breakout, right? But I think this inflection high comes back to an inflection low, even if it's a higher low, and then it starts to shift off that, or we continue and remain to be stuck in this structure sideways. And you got a range high and a range low, but that's a pretty massive range high, range low, right?
Oh yeah.
Because I can't see bonds just going like this and the government saying everything's fine.
Well, yeah, I mean, the government has to finance, the deficit. These rates at, on the 10-year and 30-year, almost 4% is an unsustainable financing rate for the U.S. Treasury.
Exactly. And when you look at it from that perspective of it being unsustainable, you have to consider the fact that we could be in a topping pattern in a lot of these bond yields, right? And if we're in a topping pattern, that means we should see buying start to inflow into bonds or being forced to inflow into bonds, aka the Fed breaking things by just raising rates to a ridiculous amount to force people into bonds that they won't willingly go. And, later on, turning that into an economic massive downturn at some point. Because if bonds start getting bought up to bring them back to sustainable rates, we're going to see economic downturn because that money has to rotate. It's not going to be money out of thin air because there's no more printing. You see what I'm saying with that?
Mm-hmm.
And when you consider money rotating, that to bring bonds to a sustainable rate like the 2-year at 5%, you're going to need a significant amount of buying, which means you're going to need a significant amount of selling in stocks and other assets.
Right. Yeah, I mean, the money's got to go from somewhere.
Yeah, exactly. And it's not all sideline like people keep saying it is. I think a lot of the money is invested, not only invested in, and here's the thing. How do I know this? Why do I think this? Because look at companies. What are they doing? Are they investing in growth with the extra allocation of money that they have? Is that what they're doing?
Laying off people, firing people.
I'm talking about with the money they have on hand. What are they doing with the money they have on hand?
Buying back stocks.
They're buying their positions in their own companies, trying to fictitiously inflate them to prop them up. What happens when they run out of buying money to buy their stock?
No one buys it.
There's no bid.
There's no bid. There's no bid. Nobody's bidding these stocks. These companies are bidding their own stocks. Look at all the buybacks that are coming in.
Well, what I will say is, a significant amount of asset allocators are, long only funds. They're not, hedge funds that are running long short. So you have a lot of people out there that are just running long. And so with that, think about what I just said, I sold small caps and bought bonds. And, it wasn't like I was taking money new from somewhere else. It was just, I just shifted my portfolio allocation.
Yep. Yeah, exactly. That's what I'm saying. That's exactly what I'm saying. And I think smart money managers will start to do that. They'll start to shift from buying risk to buying defensive, right? And that means even new inflow capital, aka 401ks and so on and so forth, will stop buying risk, and that new inflow capital, which there is always inflow capital, don't get me wrong, I'm not saying that there isn't. That new inflow capital, aka 401ks and so on and so forth, regular investments, will start to shift in the way that it's investing. And when you start to see that new inflow capital shift, old money that's sitting in these current, we'll say, stocks and stuff like that are at their highs and are not getting new allocations from 401ks will start to slowly shift too. And when we start to see that shift, we're going to start seeing money moving from offensive to defensive. And I do agree there are up only companies, and it's just about how you're allocating that up only, right? At the end of the day, are you allocating that up only to defensive, or are you allocating that up only to offensive? And I think that smart money funds that are up only, they're constantly switching between the two depending on the current situation or where we're at in the market. And I think most smart money funds are looking at ranges, aka data. They're not looking at charts. And I showed you guys how to read ranges earlier today. And when you look at a range perspective, we are at the high end of the range on many different assets. Even the 2-year is at the high end of the range. Like, I think this is the most optimal position to be buying bonds currently, at least for now, right? Until we break out or break down. And then you have to come back and revisit and see where that is now on the next move. So for now, I think people are allocating to bonds because we're at the high end of the bond range. We're at the high end of Bitcoin's range. We're at the high end of many assets range. I even showed you Meta and stuff like that. I think they're at their high end of the range. Do I think they can bid more? Sure. Tesla, we're at the high end of the range. I think the highest bid for Tesla is 220. We hit that point, I'll short that thing to the floor because I think it's going back to 140. And I think, like, if you look at it from that perspective, there's a lot of things that are in that upper range ready to come down. I don't know. What's your thoughts on that, Aaron?
Yeah, I mean, I think that I think a lot, like, from a risk perspective, I do think there's a lot of things at the upper ends of their ranges. What's not at the upper end of its range is like the underlying bonds. So that's one. You have bonds at the low end of their range because they've been selling off.
Well, when I say the upper end for bonds, I mean like
yield.
The upper percentage, upper yield range, right?
Yeah. So sorry, you were on that. I was expressing that a different way. But anyways, what is interesting is you talked about defensives. Pull up like a chart of XLV, and so your 3 defensive stocks generally are healthcare, utilities, and consumer staples. And so you saw this massive rotation into those at the end of last year. And those were your best performers from last year. You come into this year while everything's rallying, all this stuff just keeps getting traded lower and lower and lower. And that's been an interesting phenomena that I've witnessed this year, is watching how all 3 of those assets have just gotten completely sold off against, all this other risk.
Yeah, I mean, a couple key points here. We got a higher low. Higher low is at the sustainable support range. This right here looks like a fake out move to the low, only to go long. And then once they went long, they hit the high end of the range, came back, sitting currently at the low end of the range. It looks like they're going to come back up again.
Perhaps, yeah. So that's like, So that's like your defensive play. And when we were talking, one thing that you got to try to do is front run these. You got to front run, if you're running long short, you got to be front running two types of people. You got to be front running, both your long onlys and your hedge funds. So like we were just talking about, people who can only go long only, it's a rotational game. And so they're constantly trying to figure out the most efficient use of their capital. And they're looking for the next like trend or trade. And it's kind of like what you've talked about a lot in the crypto space, when what we witnessed over the bull run is when you get these really large sell-offs in everything, right? Like certain things underperform and then you get like a sell-off in everything. But then it's like, okay, once you start getting towards those new lows, what is the next rotation, right? Like if we're talking about crypto, it's like, well, one time it was like NFTs, and then it was gaming, and then it was something else, right? And the same thing kind of goes for sectors of the stock market. And so, and partially that plays into certain macro trends about what's happening or what's shifting with consumers or whatever. But that also happens. So yeah, it's like if you're long only, the money's got to go somewhere. You got to always think, some people always have to buy, like asset allocators have to always buy something because that's how they make their money. They get fees.
Yeah, even 401k providers, they're always buying. They never sell.
No, exactly. I mean, I was just telling you, and that's why I described my 401k as my long only account, because I literally have like five things I can buy. It sucks. But all that aside, so you have to be front running these large rotations in capital by your long only managers, because you want to be positioned before they start systematically buying whatever it is. And then you want to be front running your hedge funds because they're going to chase that momentum after once whatever you bought starts getting bought up by more asset allocators, then it starts picking up momentum, and then your hedge funds start chasing it, and then it gets bid up even more. At the same token, whatever you're short, now you have to be front running other hedge funds, because what ultimately happens is you're trading against people that see the momentum to the downside. And if you're both in profit, you got to cover before they do, because if you hold on to your short too long, it's going to rip back up on you. So you have to be always trying to think about front running the other players in the market, because that's just how you can make away with your wins.
Yeah, that's why I'm always telling people, I'm like, look, I know there's potential. I'm not saying XLV will, but like when you're looking at a chart, you're like, okay, here's support. It's going to break down. We're looking for this support. And I always tell them, like, look, if you're up here, only look for this support. Never look for this support when you're all the way up here. Why? Because if you're doing that, you're gambling. That's all you're doing. And it could very easily rip out and then rip right back in, but take out your position. And now rather than capitalizing on the move, you lost your money or got knocked out of your position. And that's one of my biggest key factors that I try to teach people all the time. Just like, look, always take your profit at the next resistance, at the next support. If you're long, resistance. If you're short, support. Always take it at the next one.
Can I provide an example of what I did recently that kind of goes with that?
Yep.
Look at a chart of MPW. Now, fundamentally, I think this company is garbage, and it could potentially be like a low single-digit stock. But it basically came right back down to the resistance, or the support, I mean. And before it started to squeeze up, I sold most of my puts, or at least my shorter dated puts. I still have some out for October, but I had some Aprils and I just got rid of it. And, while, fundamentally I can have this view that I think it's going to go much lower,
I still did what I needed to do to avoid getting squeezed over the last couple of days.
Yeah, I can tell you, being in a trade, there's nothing worse than catching the top and starting to see it go against you.
Mm-hmm.
There's nothing worse than that. And if you're a new trader, you should always be looking at support and resistance as your only zones to be taking liquidity and getting in and getting out. If you're a really good trader who can identify patterns really well, you could probably take a trade from here to here because you can identify a trade, right? But if you're a new trader, you should only be playing your zone. That's it. And so many things have been showing that zone. I think the biggest thing is a lot of traders aren't willing to sit on a trade. They're not willing to, they want to trade every single day. But this is literally a monthly trade. Look, high, low, profit take, high, low, profit take every month, once a month.
And that's, yeah, I mean, that's what I guess once you get more advanced, you can find ways to structure your trades differently. So, on this one back in, August of last year, and August of 2022, I bought puts for October of 2023. And so, I gave myself duration on that. And I also had a short shares position at the time. Well, it went down a lot. And so I just covered all my shares and left I have a whole year on that put position for if I'm right on this fundamental thesis for it to play out. So I didn't touch those. Well, then like Will just showed, you get this large rally off the lows. And I covered my short shares position, so now I can add back to the short shares position. Well, I added a little bit too early, so now I can kind of wait a little bit and then now add some puts. So then I added some April puts, and you saw it trade down to the lower end of the range. Well, I covered the shares, and I should have sold the puts, but I got greedy, and I didn't sell my April puts. And then you saw it rip back up to the top end of the range. Well, my mistake is if I just would have sold those April puts the first time, I could have bought them again and basically doubled my money on that trade. But instead, I was a little greedy, so I didn't sell the puts, and it ripped right back up on me. Well, I bought more puts, I shorted more shares, and then it got back to the lows, and I covered the shares, and then it got lower, and then I sold the April puts finally, because now if it goes back up, I'll have a chance to buy more puts, or shorter dated ones, that is. So I guess the moral of the story is that, in my case, this is a situation where fundamentally I was really tied to an idea, and I let that kind of control or let me lose sight of trade, like just focusing on trading the range. Because if I wasn't thinking about anything other than the range, that first time around, I would have sold the puts in a big profit, and then I would have been able to add them back at an even better price than I got them the first time too.
Mm-hmm.
And then sell them again. I don't know if
That's
that.
really hard. I'm sorry. Go ahead.
No, I was just gonna say I don't know if that makes sense, but if you just trade the ranges, sometimes you're able to get more out of it.
Yep. Yeah. Even though it seems boring, it's really the best way to trade, especially in this kind of market. Go ahead, Miguel.
And it's when you're trading commodities, also going against the dollar. The dollar last week was nuts. So it's kind of you see the volatility going up and down really quick on your move, on your trade.
Right. And that's why it's really important. It's also really important to understand the volatility of what you're trading, and that needs to influence, how you're trading those assets. Because, so I mean, if the volatility is that high, maybe you don't want to hold it as long. Maybe you want to be more in and out with those types of positions.
Correct. Right.
Yeah, this thing definitely looks like, Aaron, it's going to rip back up. It's a little bull div right here.
Yeah.
So it looks like it wants to come back up, probably continue building to the high here, And then either it starts to move trend back out or it starts to trend back down.
I haven't, yeah, I mean, I haven't, that's one that I'm definitely gonna, I mean, it's got like 20% short interest, so all it takes is one day and that thing can go like, it can move.
Yeah.
So yeah, I haven't added back to it yet, but I'm holding on to the Octobers, just given, you know, my fundamental stance on it. And because I have time to be right.
Yeah.
I mean, they're already in the money. I think I bought like, I think I got 17s or something.
Yeah, it looks like a solid trade for sure. This one right here. Can you guys see the range on the S&P?
That's a tight range.
It is, but where's the top?
That red box.
Been the top the whole time. That's why when people say, bull, 4,700, 4,800, S&P. I'm like, bro, we haven't even broke the range. What are you talking about? We got to break this range. If the S&P doesn't break this range, this is done. I'd like to see lower highs here if I'm looking for downside. If it pops back up, it might drop back down. If we look over here at, I want to show you guys something. See this move right here? Right here. Where basically they drop down. And then what did they do the next month on the open? What they do here? We'll get rid of that orange line right there. We'll delete that. So that they drop down right here. And what did they do right here on the open? What did they do?
They went up.
Looks like it went up. Right up.
They went up. And then what did they do after they went up and hit the top of the range? They went down. And not only down to our lowest lows. Look at that. Doesn't this month look very similar to this month right here? Look at that. And lower highs. See how it's kind of moving down in momentum? What are they doing right now?
Topping out during the high.
They're going up, right, guys? To the moon. To the moon. I'm telling you guys right now, I think this is going to play out the same way. A little bit different. And I had it kind of play out because I don't think history ever repeats. So let me show you the difference. The difference is I think they go to 50, which is what I showed you guys. And I had this on my Twitter. So what I was trying to explain to you guys. Then they break the range at 16. Then the next month does what? What does it do on the next month? Bounce back up to hit the bottom of that range, right? And then what's it going to do on the next month? Drops back down. Retest of the high, fall down to the low. Recover all the liquidity from the area of where they came out.
Yeah, I mean, if you on a daily time frame, there's just a absolute monster wick on the S&P back in that local bottom that needs to get filled.
Yeah, there's a ton of liquidity over here. Just they left behind a lot of liquidity. Look at this. Look.
I mean, that day was a 6% swing.
There is no way the market maker is not coming back for that, guys. And if you think about the S&P from this perspective, this could go south really quick. You want to see what that looks like? Rather than just visiting the same low, this could actually turn into a breakdown structure and just be a longer term rally move. So just like Bitcoin, what do you notice right here?
The broadening wedge.
Well, I'd say it's a downtrending wedge, but if we were to clear all this up, because this uptrend's already been invalidated. So let's go and let's look at it from this perspective. You guys see it now? So if we're gonna drop down, we can go a lot lower, couldn't we?
Yeah, I see it now.
It's ugly.
Understand the move. Again, not really rounding, but definitely consolidating the high. You do not want to consolidate a high. You want to consolidate a low.
It's
I-
been it's been consolidating high like that for six, I mean, this is a 6 month consolidation.
I think it's 8 or 9 months. Look.
Actually, I think you're right.
1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 months. Sorry.
Wow.
Next month will be a year. It hasn't been able to break the 4,100 range at all.
Literally hasn't gone anywhere in like a year.
That's why when people are like bull, 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 I'm like, you guys are dumb. You're buying the high end of the range. That's what you're doing. This is the high end of the range of the S&P. If you want confirmation on the S&P, let it break out, let it retest, and take the move on the retest.
Speaking about a retest, there's this stock that I've been following for a good amount of time now, and I chickened out on the buy, but it actually ended up going for a new high on Friday. It's called AMR. It's a coal mining company, but that might be one. If you get a good retest, it could be worth a
This
shot
one right
out
here?
on the line. Yeah.
Oh, I mean, I'm not gonna lie. I think this thing stopped.
Yeah.
Yep. I'm gonna tell you why.
Go for it.
You got a solid high right there, continuously being retested. You got a bearish div played out right on top of it.
Gotcha.
So you got less interest, we'll say, which is basically what strength is, right? Buying and selling. Less interest at a high position in the chart. Do I think it looks enticing? 100% I do. Because why? Because there's a couple chart patterns playing out here that makes it look enticing. Ascending wedge, right?
That's exactly what I was looking at.
Yeah, but
But-
it looks like it's gonna drop.
But what the problem is they weren't able to violate the high, right? Whenever price is really going to move through a zone, it just shoots up in a day or in a month.
No, it
or
did.
in a week.
Or look at it on a daily.
I mean more something like this.
Gotcha. Okay.
If we had a breakout that looked like this, oh, this thing's it's gonna do this, then it's gonna do this, and then it's gonna go. That's a continuation pattern. It's already consolidated long enough here. If it got that big breakout, it'll break out, it'll retest, and it'll just move off of it. There's not gonna be a lot of consolidation here. It's just gonna move away from it, FOMO people back into the high, consolidate, maybe retrace again, and then shoot back up.
Gotcha. No, that's why I wanted your feedback. I just wanted to hear what you thought about something like that.
Yeah, for sure. I mean,
This company is like $1 billion. It might be like $1.5 billion in market cap. They have like no debt, and they do like 40% of that market cap in free cash flow. So they basically, yeah.
you want to know what I think they do? I
What's
think
that?
they retest.
Yeah.
B shape.
I don't think it'll be like it's not. It looks dramatic, but it's going to be a retest of there, or at minimum, it's going to be a retest of here, right? But retesting here is simply what?
Range.
It's a range, right? This is a range play. So this is a short for me to the bottom of the range. And then if you're still bullish on it, buy it at the bottom, have a stop out probably just below this wick right here, right around 116. If it stops out below 116, what it'll do is it'll roll down, it'll retest, and then it'll come back down to these lows and it'll consolidate here. And this will be your best buying opportunity if that happens.
What about ARCH? ARCH. It's a similar company, but I want to see how that compares.
I like the
to
structure though. I did like the structure. It looks amazing, but the RSI is reading different on what the chart's reading.
Yeah.
Oh, same thing. Look,
Yeah.
this is crazy how these are all look exactly the same.
Well, I mean, they're both coal. I mean, it's the same type of company. They're coal.
Now, a lot of people will take this as a breakout. I don't think it is. I think it's just a higher end move, right? Because if structure was looking to break out here, and you got a little bit of a wick here too, which is another concerning part, right? If structure was looking to break out here, we would be higher in strength, right? Strength would be equal or higher. But because strength is lower where it's sitting, even if strength comes up a little more, price tries to violate a little higher to these higher wicks, it's still going to fall back below. And I think it's going to, what I see here is a consolidation zone. So I think this is a consolidation high to a consolidation low. I don't think it's a breakdown. I think it's just consolidating. Just like it did over here. And just like it did down here before it took off.
Gotcha.
So these are good places to buy. You just want to buy the low, right? You don't want to buy the high. So I just wait for the pullback. Once price gets back to that like 118 zone, and same thing on the other one, probably just wait for the pullback, right? Maybe into that 126 zone and start taking buys on the 126 until it proves that it wants to break out, and just have your stops below 116.
Yeah, I prefer, if we're talking, I prefer AMR fundamentally to Arch. The free cash flow has been better.
Gotcha. Yeah. I mean, to me, it's a great consolidation zone to be looking to buy, right? You just got to catch those lows of the consolidation. They're kind of tricking you here by floating price up like this and then like closing just above trend, right? It's like a fake out they got going on here because they didn't come through with force. They closed just above trend. So if you were to take it like that and you were to ignore the wicks, what do you got going on here?
Well, I guess, I mean, the month's not over though.
Yeah, I know, but I'm just saying like this will be a multitude of months to come back.
Yeah. Mhm.
So what I think they're doing here is I think they're going like this, and again ascending, right? But there's also this top move right here, and I think they're gonna fall back out of it, but I think they're gonna catch at the lows here.
Yeah.
And then maybe consolidate low and then shift out. This is a key point. You can see good support in the move. So this is a key point to be watching this. Catch the retrace, because on this retrace, it'll more than likely shift. That's what I would be looking for on this one. I'd look for the shift out from there. So if you miss the retrace and you're too scared to enter here, then don't even look at the chart, right? But if you want an entry here, I'd be looking around that 126, maybe even 128 zone. As a good entry for a long.
Well, I mean, because it's hard. I mean, it's hard to find. It is hard to find longs in this market. So I'm just trying to think out of the box.
Yeah, I mean, and I'll tell you, I've came across so many charts that look like this right now, man. It's crazy. Like they're all hovering the highs. They got no confirmation breakouts. They've got less strength on the overall market. And then if you look here too at the stochastic, looks great, right? It's low. Stochastic's low. But the problem with the stochastic is it can be tricky, right? Stochastic can remain low for long periods of time. Look at this downtrend. And the stochastic was sitting at the bottom the whole time.
Yeah.
And that's a massive downtrend. So like the stochastic being low is not really an indication of the move here. But what it is telling me from the stochastic's perspective and from the chart perspective is I think what they do. Okay. What I think they do here is I think they're rolling back down to the 50, making room, right? Consolidate, making room to go bullish. I think this is bullish long term. I just don't know how much time that will be. But, I think it'll be something like this. And it'll just roll off of that to the upside. And then that'll be kind of your shift out.
Mm-hmm.
It just, you don't want to catch it too early because it's like catching a falling knife where it sits at right now.
Mm-hmm.
If this plays out, you better let me know.
I'll be watching it.
I have too many allocations right now, although I'd like to get into this because it looks good, but I want you to tell me since you're interested in it.
I mean, I'm not in it yet, because like I said, I chickened out on the buy.
I think you'll
Um,
get another opportunity though.
No, I know. I mean, I never lose sleep over missing an opportunity because there's always something else you can trade.
Yep, 100%. And that's another thing I try to voice to people. It's a very important thing to always pay attention to. If we look here at oil, I think oil's going bullish. I know a lot of people have said the opposite. We've had this solid consolidation sideways. We're sitting at the lows of stochastic. Again, I've mentioned before, stochastic's kind of mad because they can remain elevated to the low or the high for long periods of time. But the reason I think it looks good is because we're also consolidating above the 50, right? And because we're consolidating above the 50 and kind of hovering this 50 range, there's good potential we could shoot off of that. But what I'm thinking is that we're going to see here for oil is we're going to see a higher high into that C wave, aka entice people above all previous highs, right? That higher high move. And I think we're going to see a lower high on the RSI, indicating a bear div playing out. And then oil just slowly starts to lose its position, right? To the downside. That's where I think oil's heading right now. I think that's a pretty solid thesis for this. I mean, the bottom here looks really rounded out, looks really clean. I like it. I think it wants to go long. We talked about 10. I think 10's falling back, aka buys. YF die, I showed you guys the zone of where liquidity would go. Boom, hit it, right? Starting to pull back off of it. I think it's going to round back out here. And we're going to come back down to these lows, but I think we'll maintain this high. Chinese yuan, USD still losing momentum. That's why people are like, oh, China's propping up the markets. China's value of their currency is literally garbage, and it's continuing to devalue day by day because they keep printing. So don't think that China will prop up the market for very long. It will be a negative factor, I think, in the longer run as they start to see inflation hit them extremely hard. I think the Chinese just are ignoring inflation at the moment, but it will come back around to them. They're in the liquidity mania phase like we were in 2021 right now.
I was about to say that, which is why, like, short term, I kind of like some of their stuff, which you kind of make a good segue if you want to talk about some Chinese stocks.
Yeah, I think a lot of Chinese stocks ignore Chinese crypto. I think it's just BS at the end of the day, and people will try and pretend like they are. But I think Chinese stocks will bid off of that, and I think that's kind of the move on Shopify and a lot of other things, Alibaba, and a lot of the other things that will bid. Short term. It's like a mini bull market for them. That's going to end up ending up way worse, I think, than what we have been experiencing in the mid to long run.
I agree with that. Can you you want to roll through a couple Chinese stocks?
Yeah, we can roll through some. Let me just finish up these ones real quick, and then we'll roll.
Yeah. No, just let me know when you're ready. I'll be listening.
Okay. XRP looks like it wants to roll back up. Lower highs. Looks like it's resisting. I think it comes back down to the lows here again. It's just a range, guys. Just in a range. High into the range, low into the range, short the high, long the short, or along the bottom. And just take everything step by step, guys. Try to always stick at things in a range, right? Bitcoin here. Bitcoin's been kind of hovering this upper range. I think Bitcoin retests this lower range. I'm just waiting for it to happen. ETH BTC pair, which means ETH loses dramatically against BTC. And really, I'd like to see ETH test these lows around 36 or 36. If it can get down to here, there's some solid support in this zone, and that would mean ETH's getting crushed to the downside. It's just been in this long-term uptrend ETH BTC. If ETH breaks out of here to the upside, which I really doubt is going to happen, but it's always a possibility. If it does, that means ETH is killing BTC dominance. That would be very bullish for ETH. I'd expect a retest if that ends up happening, probably back down and then take off. And then that would be a time to be looking at ETH pretty closely, aka or a altcoin season. We're almost at the previous highs, right? Where ETH and BTC were really fighting over here in 17, 18. And we're actually less high than we were over there. And we've been trying to remain elevated against BTC, but I think they're going to lose ground on this personally. I got a bearish div right here. I got a solid top right here telling me that price looks like it wants to bid short. The way it's looking to me for Ethereum against Bitcoin. Again, this is just their positions in market capital. Beyond Meat, something I've been watching, it's got a nice bounce over here out the bullish div, right? Popped up high. I think that they're starting to reject and getting ready to roll back over and come deeper. Beyond Meats is one I'm watching, but not looking good for this company. I'll tell you that. Not.
I
looking good.
agree. I think it's a short.
Yeah, I think they're gonna roll over for sure. Looking at DOT, so DOT's basically moved from this downtrend into what we consider a consolidation zone, right? DOT will see these lows again, I think. And you can see it from the solid rejection on the wick here, looking like it wants to go short. And if it ends up doing that, I think it's sideways price action for now. And then we'll kind of see, does DOT want to step lower or does DOT want to move higher from there, right? We get a breakout of the high. We should break out, find support. You can get a retest, re-entry if you want to get in there like $6 or whatever. Wait for breakout confirmation though. Let price break out extremely hard, pull back, and you can get back in at the low. KSM, big rejection on KSM. I think KSM's turned into a big distribution. I thought M formation looks like it's more like a rounding formation. So I think KSM's going to come back down and revisit these lows. And we are kind of a little bit above, we got a little bit above the high and the low of the zone. We broke out pretty dramatically here. Way overbought on stochastics. Stochastics still saying we're way overbought. Hit the 50, deflected. I think KSM's coming back to the 30, and I think KSM's coming to the same low, if not deeper. So be careful with that one. AMD. So AMD looks like it's trying to bid. I got a high sitting here around 92.51. Kind of looks very similar to Meta, right? So it still has room to come up. I just think that these highs, like on AMD and on Meta. So look at the AMD high. Look at price over here. Look at how price reversed over here. It's not as dramatic as Meta, but this is the same move. Look, the same sell-off and the same pump. Now we'll go over here to Meta real quick. Look, you got the bid, you got the same sell-off and the same pump right there. They're identical, right? So just be careful with that. I think they're moving kind of in tandem together. Was that NVIDIA I was looking at? Meta. Oh yeah. Oh no, I was looking at AMD. Yeah, I'll look at NVIDIA.
No, but I was just saying in relation to AMD.
Yeah, we'll check out NVIDIA too. So NEO, we talked about this. This is a heavy consolidation zone for NEO. And again, we're talking about bidding China, right? This is the low of the zone. So if you're looking to bid China, again, it in and out, take the low, sell the high. High sitting up here around $13. This is one of the ones I'm looking at for China. Hex, I think they've just pushed way too high. Holding the highs here, looking good as far as where they're sitting, but they have not broken out with any significant force. This is a heavy rejection. I think they're rolling back over personally. I think Hex is doing a round top right here. And this is where I'd look for the next support around 0.031.
So Will, what do you think about US troops going to Taiwan and how that would affect these stocks with China?
Again, I don't think they will. There's too many companies that are tied in. They think about it. Starbucks just went over and built how many stores in China? America has to be very careful about the way they're coming at China, right? They can send over whatever they want, but at the end of the day, I don't think we're going to personally inflame China. Again, it's just my perspective on things. A lot of American companies are going to get financial. Look, if China and America go to war, you will have more worries about American stocks than you will about foreign stocks. I'll put it that way.
I think it'll be worldwide.
There are so many American stocks tied into China where China would literally just take their businesses from them and kick them out of their country. And those companies would be out of a lot of money.
Well, I seen something on I think Stock Sharks' Instagram page. They said something about this billionaire who has like a lot of money in Chinese stocks, and he can't get them out right now. Like China's not letting people take out their money from the stocks and all that kind of stuff like that. Do you think that AMD and Nvidia and those kind of stocks are safe from that for now?
Yeah, because AMD is Korean, so I don't think they'll be affected at all by this.
Oh, is it? I thought they were. I thought they were Taiwanese. Isn't Nvidia
I'm pretty
Ti-
sure
is-
that I'm
or-
pretty
or
sure
TS
they're Korean, aren't they?
I think those are all Taiwanese stocks.
Maybe.
AMD, not Nvidia's American, but AMD and TSM. I think those are, yeah, TSM is definitely Taiwan.
Yeah, TSM maybe. AMD.
By
I think
the way,
AMD too. I could be wrong.
his money is, I don't think it's in stocks. He has money in like the HSBC, which is like a
Yeah,
bank.
yeah,
Yeah,
it was that. But
it is Korean. It's Korean Japanese.
okay,
So
sorry.
again, but they're tied into China, I'd say, in the economical bigger landscape, but they have their own economies, so they're unrelated in a sense. Yeah, according to South
If you
Korean
were invested,
industries,
say,
yada,
in like
yada.
Alibaba, say if
Well,
you have money in Alibaba, you
Alibaba
think that'd be safe?
Alibaba has positions like in the Middle East too. So keep that in mind too. They have a lot of what's it called? They have a lot of funds that are kind of funding them from out that way too, I would say. So it's a little bit different, right? Like the Chinese specific stocks would be the biggest worry. So like NEO is Chinese specific, right? It's like the Chinese Tesla. So that would be complete and absolute exposure to China. And if China were to do something horrible, then NEO would be heavily affected in the American market by that type of position. Does that make sense?
Yeah.
So there'll
But
be
that's
some
just the
that are
value of the
affected.
stock.
Yeah, I think also there's a lot of Chinese money in places like Disney. There's a lot of Chinese money in places like let me think of other ones that they're probably investing in. Google,
Real estate.
real estate. Like there's so many sectors that they're already tied into that if they just sold off those sectors, it would be really bad. But then again, also, if we were to go to war with China, I'm sure that we would do something similar to what we did with Russia and just freeze their assets, so on and so forth. And then nobody in the world would trust us again. And our economy would probably get obliterated financially from doing that alone, right? Like what we did to Russia is completely and not okay. As much as look, I'm not agreeing with what Russia did. I'm not saying that, guys. Like what I'm saying though is when you're talking about trust factor to a fiat that you're saying will back your currency, you cannot cut people off from their money. Period. You just can't. You do that kind of stuff, you show them how much control you have, and then once they see how much control you have, they will not invest in you because they don't trust you. Does that make sense?
I believe that too, but then you see things like with the Bank of America when the people couldn't get their money out, and also like certain crypto exchanges too, where people can get their money out. So they're all small instances of those things kind of happening.
Yeah,
that,
but
you know what I'm saying, with
governments,
American,
but the government doing it is the worst. There's the government is fiat, right? The Federal Reserve is the dollar. So when you do those type of things, you damage the dollar's reputation. And financials is the biggest reputation you can have in any part of the world, right? If you want people to use your currency as the one world currency, you need them to trust the currency. Even if they're at war with you, you should not mess with their financials ever.
guess what you're saying.
Yeah, it's not a political thing. It's not a what they're doing is okay or thing or any of that stuff. It's just a smart move, guys. Like you gotta think about this from a financial standpoint. You are damaging the reputation of the dollar. Period. Wars happen all over the world. People die, and I'm not saying that that's okay either. People die all the time. There's wars in Africa every day with their own people, so on and so forth. There's wars in other third world countries every single day with their own people, gang wars and everything else. And there's nothing done about these things. Those two turf warring, Ukraine and Russia, they are basically the same country warring with each other. It's literally a turf war between basically what used to be one union country. And I'm not supporting it. I'm just saying like us getting involved from a financial standpoint made no sense. If we wanted to get involved, then it should have been a war situation. As in we go over and we war with them, but we don't mess with their financials. That's just how the game has to be played. Otherwise, people do what? What did Russia do once that happened? They started buying gold. They started backing their currency by gold.
Yep.
And now our currency is weaker because of that. And the more countries that catch on to that, the weaker and weaker our currency will become. That's the whole point behind it. So as we talked about with Tesla, this was a big one I talked about with you guys, big round top distribution zone. And then we've got a bigger one up here. Look at this massive half circle here, guys. Look at this. And this is a pretty low position to be taking. Another area I was looking at was basically these lows right here were the lows that they came up and tested and rejected. The best case scenario is Tesla runs up one more time to hit this low around 220. And then this thing's coming all the way down. Like we're going to hit these gaps, right? You got a gap around 147. You got a gap. And if you guys want to look at it, you can see it on a daily. There's a massive gap up here. Look, this is the weekly. And there is a gap right here, right? On the daily, the gap is right here. And you got another gap all the way down here at $44 for Tesla. I'm not saying all these gaps will be filled, but they should not be ignored. Never ignore gaps in the stock market, ever. And if Tesla goes to $44, everybody's going to say the company's going bankrupt. Guarantee they will start saying the company's going bankrupt. Elon Musk is done. We need to start investing in other areas. And you know what's going to slowly start happening? You're going to see all those firms come in and scoop up the low. And then we're going to be right back up here at some point. They're like, hey, guys, you got to buy Tesla. Buy it a lifetime. Everybody buy. Everybody buy. And they're going to start trying to get people to buy it back up. That's how this game is played, guys. Like, again, another reason why I'm bidding this, like the most ridiculous, like if I told anybody outside of you guys, hey, I'm buying Silvergate, they tell me I'm stupid. 100% they would. I'm bidding it because it makes sense. It is a financial institution. They have money, they can print. So I'm not bidding on their longevity. I'm bidding on the people that are stuck in their positions with them. Again, the biggest money firms out there, BlackRock, tons of financial institutions. Oh, speaking of which, I wanted to show you guys this. Investor position. So I think there's a way to do it from here. I think it's over here. Sorry, guys, give me just a second. I'm trying to pull something up for you real quick. I think it's. I see that. So I had a list. I can't find it now. Maybe it's here. Price per earnings. I'm trying to find the investor list for Silvergate.
Hey, Will,
Yep.
I'll have, if you remind me, or I can shoot my buddy, and I'll try to remember myself. I can shoot my buddy a text message who has access to a Bloomberg terminal and get him to give me the percentage ownerships.
Yeah. I found it somewhere, but I don't remember where
It's CNN Money.
Yeah, that's what it was. Yep, CNN
what
Money.
you sent. But I've noticed that, I guess because I've done that for I've used that for fundamental research for certain stocks I've looked at myself, because I don't have access to a Bloomberg. But I've seen discrepancy between the data that Bloomberg, if I get it from my buddy, I've seen discrepancy between that and what's shown on that website sometimes. So while that website might be a good indication, it's not 100% accurate.
100%. Yep. No, I get that for sure. These are all lagging indicators at the end of the day.
Yeah, but yeah, that being said, I'll text my buddy and see if he can look it up, and if when I find it out, I can share it with you in the group.
Yeah, 100. Yeah, if you can get that, that'd be great. So if you guys look here, like I'm looking at SSGA fund management. I think these guys are, pretty good fund management. Vanguard, this one, bro. Like Vanguard's in every 401k. They got a massive position inside of Silvergate.
Dude,
BlackRock.
That's so bad.
That's what I'm saying. So they have to
It's
do
just
something here.
I mean, but but that's the thing. So like, that's like passive ownership. They've just stuck it in some type of whatever fund.
Yep. And that's exactly what it is. This is exposure through one of their funds through a 401k, I think.
They probably have some like high growth fund that, or like crypto ETF that they have it stuck in.
And if you look here too, BlackRock has less in their position. They were a 7% allocation. They're at 6% now. Miller Value Partners, Millennial Management, like these are all big funds, guys. Like Morgan Stanley right here with 2.23. Like these guys can't write this off. There's no way. They have to be able to get out of this position somehow if they're looking to get out on a bankruptcy, right?
How do you even liquidate? There's not enough liquidity in that stock if they were to go to the market and sell 3 million shares right now.
That's what I'm saying. So the only option they have to get out is two. One, they help float them along and help them survive. Two, they pump this thing up somehow with liquidity and exit on that exit liquidity.
I see where you're coming from.
You see what I'm saying? When you look at the investors here, like especially this one, man, like this is going to be a problem with the government, right? They're going to be like, dude, you guys have so much of people's money in your 401ks and you just completely obliterated them by investing this much into this company.
Right. And that's the thing, like that's kind of like the same thing with MPW. Like MPW, if you look at that website, I can't remember what it'll show, but it's heavily owned by a lot of these passive indexes and ETFs, right? Because it's like a high dividend, and it's just gotten stuck in these high dividend yield ETFs, and it's just passively owned. But what happens to that company if they get accused of, if they are found for fraud, right? You can't, I mean, and this kind of parallel at SI, because what happens to SI if it's found for fraud? Both of these companies, they have this large passive ownership from these entities. These these like large asset allocators, Vanguard and BlackRock, now own a fraudulent company. Do you think they're going to like hold on to it, or what are they going to do? They're going to have to like dump the shares immediately.
Yeah, but there's no liquidity to dump the shares. That's
exactly. Yeah, I know.
So when I look at it from a market maker standpoint, I figure this: BlackRock's got enough money. All these guys got enough money. They'll inject money into the market. If this thing moves too fast, I'll get out, right? Because if it moves too fast to the upside, that means they're looking for exit liquidity. If this thing kind of plays out over time, then it'll become a long-term hold versus a short-term hold, and I'll watch it kind of round out this bottom. But I think $5 is I think that's going to be the bottom, because like they can't sell any deeper. Like where are they going to sell it to? 20 cents, 10 cents? Like there's nowhere to go from here without massive losses on their sales. All these companies have to be in the negatives right now if they were to try to go to open market and sell this.
Yeah, the one thing I'm unsure about, like, and I guess, I mean, I don't know if you know the answer to this question, but yeah, how like on these ETFs, like these large managers, let's say you have, it's like you have to own that because you're trying to make an index. But what happens if, the stock that you own is going bankrupt? What do you do?
Or found to be fraudulent? There's a lot of things that can happen here, and Silvergate's in one of those positions where they could be found fraudulent. Good.
Yeah, no, because I'm just thinking, because like, over time, these people, these asset allocators, it's not, they can even if there's volatility in a stock, like generally, like they just buy it over time and it goes up over time, and they just keep it in like an index. But I guess I don't necessarily know like how often some of these people are selling these stocks for a
Well,
lot, like a
look-
loss.
Look here. Morgan Stanley, largest quarterly institutional transactions, 580K. Morgan Stanley, 580K. Two Sigma, 589K. Millennium, 1.1 million. Renaissance, 1.1. These are quarterly institutional transactions. At 1.3 right here on this one.
Was that
Look,
for Q4 though?
yeah, this might have been for Q4. One other thing too I wanted to point out here. Look at the allocation. Mutual
Yeah.
funds, other institutionals, and look at individuals. Who they gonna sell to? Each other?
Oh my God. It's just a disaster. Like, and that's the case for so many, like, it's not just this stock, like it's just they're like real estate, what, like all kinds of different private equity and alternative invest, like there's so many like investments, like not like specifically like this, but where it's just like there's like it's so illiquid.
Yeah, there's no retail in this. It's them fighting themselves at the end of the day. And they all thought they were smart about it. So at this point, I'll be one of the 5.65%. And if they pump this thing up to try and get some other not so smart institution to buy their position, then they're going to need to really push price up, right? They're gonna have to create momentum. And if they start creating momentum, I'm going to make exponentials on this move. If they don't create momentum, they have to somehow try and help Silvergate float through this downturn and come out of this on top. Like BlackRock's allocation is insane in this company. Like I wouldn't even think, like, why would they put this much in here? That's a massive allocation for something so risky.
I'm wondering, Google, I mean, if you don't mind, Google like BlackRock ETFs with SI. I'm curious to know where all that weight is. Like what ETF do they own where they have that big of an allocation? That first one usually does a good job of
This one?
saying, yeah, look at that one. This one usually does a good job of like showing what ETF certain things are in. So, oh my God. KRE has SI.
Mm-hmm.
Oh, that is nuts.
Do you see why I don't think it can go down? I think at best
KRE has
they
two-
float them.
2 million shares. That's crazy. IWM. So yeah, so IWM, that iShares, that's BlackRock. So that's 700K right there. You see Vanguard. Vanguard's got 400K shares between those two ETFs right there.
Yeah, and this is just the ones with the most, right? You got other exposure over here on the far ends.
Yeah. So
I don't know, man. I looking at all the stuff that they have going on and all the people that are stuck in this trade, like they have to get out somehow. BlackRock's already taken enough hits. They can't take any more. Especially with FTX and everything else. Like FTX wrecked a lot of people financially, a lot of institutions. So
And also they back the ESG platform or ESG companies, and they in Florida, for example, they're demonizing it for that it won't be allowed. ESG companies won't be allowed to function there with their agendas.
yeah, they're a big proponent. I think they work with the WEEF too. So they're a big proponent of that. Again, I think this is a round top for Tesla. Yeah, but like that's kind of now you kind of understand my thesis a little better behind SI. It's not just like a gamble in the wind. It's just kind of looking at everything that's kind of going on with it. And then like this thing, it's a shot in the dark in a sense from a TA perspective, but from like a financial institution perspective, there's too many big money players in it. There's just too many. Like, I think it all goes back to the government's famous words, too big to fail. What's up? What do you think about it now, Aaron?
Sorry. Can you repeat? Sorry, can you repeat that?
No, I said that like from a TA perspective, it probably makes no sense. But from a fundamental perspective and the investors that are stuck in it,
Are you talking about the peso or SI?
SI.
I mean, it's hard for me to just like now I have a better understanding of where you're coming from, which now like I understand I completely understand with where you're coming from, but I guess from my point of view, fundamentally, like I mean, I like ultimately do think that like that companies got like it's either bankrupt right now based on their report because they were speaking about not being capitalized properly.
Mhm.
And so what that means is it could be like a Bear Stearns situation where the stock goes to like $2 or $1 and then it gets bought out by like JP Morgan or something like that.
That's my
But-
other thoughts too. Yeah.
Yes. So, but that being said, though, if that means it's getting bought, if it gets bought out for like $1, that it still goes down 80% from where it is right now. But Bear Stearns wasn't really a case of fraud. They were just, over leveraged. And I don't really know what that means for a company that's fraudulent, though. I guess, I mean, I don't really have enough experience I think companies like that just go away. Like, I don't think like a bigger bank or someone else would even be able to buy them though, if, they're found to be fraudulent. I guess that's territory that I'm not really experienced with.
I
yet
mean,
in my life.
technically, FTX is in the same situation if you think about it, right? FTX is basically got a new CFO, CEO. They just haven't reopened the platform. So, and that's the guy who's going through and kind of looking at the books and getting all the evidence to basically, indict FTX or indict Sam Bankman-Fried. So that company technically is not bankrupt. And I think like in these scenarios, yeah, you're right. Like it's kind of a if or and at the end of the day, but it could be a good play, it could be a bad play on my end. A little bit of risk there, I think, to reward. I think the reward is substantially higher than the risk, in my own opinion. Just based on the players that are involved. Because here's the thing: if this ends up falling through for me, and it ends up I end up on the wrong side of the trade of it, I already know what to short at that point, right?
Yeah.
And
No.
and I can reallocate that money lost.
Yeah. I mean, the way I would play it would probably be just buying like a call or two and then just letting it ride. Cause I don't know how much the call I can just look right now. Cause I wouldn't want to buy I mean, I guess you just adjust your risk, but
Yeah.
like, I mean, just
I
based
have
on
stops in place too. Like if it gets below $4, I'm out. I'll lose 1/5
Yeah.
of my position.
Oh my these options are crazy. The
They're all
implied
calling?
Well, no. I'm just looking at the implied volatility and it's 435% on both sides.
What?
And that's like just to put that into context, the S&P 500's implied volatility right now is let me see. It's probably like 20-ish. Oh wow. Okay. So never mind. You can buy let me see. You buy a week out for the S&P 500. Okay, yeah, so it's like 15%. So I guess just think about that for a second. The implied volatility on the S&P right now is like in between like 15 and 18%, and SI's implied volatility on the options is like 430. That's just crazy. But,
that makes
yeah.
me think that you're going to see people stepping in to try and play the game with it.
Well, yeah, I mean, because it's just a gamble. It goes either way. You buy the options, 6 days out, and let's just say something crazy happens. You buy the $6 call for $1, which is what it's priced at right now, if that thing rips up to, you know, say it goes up to 10, like it just goes up 100% in a week and gets squeezed like that, you know, you make, I guess your option would be worth $6. So you made 6 times on that option.
Yeah, and that's really my expectations is 100% move on this. That's where I think it can go from here. I think it'll kind of roll out, V up, people freak out. Oh, everybody will buy the top, and then that's where you exit the position from there.
The Mexican peso chart's been interesting. I look at this one every day. It's really interesting.
If you look, this is all it's doing. It's accumulating. Again, my perspective on this, but that's what I think. I think the Mexican peso is going to cool down big time on this next move. I think this is the high of the move right over here. Same height it's been established for a long time.
So my study on this, if you notice every single time that it's gone down a lot, it's been because of like a financial event, basically. So like, that was like the recession, and then you had, you had a period of slower growth there in 2015.
You could see it retest here, but I think it's going to be closer to here.
Then you have, 2018 and the pandemic. Yeah. That one's been interesting.
Yeah, that's just my thoughts on that one. The pace, I think also you've got a lot of companies looking for cheaper labor and stuff like that. So kind of pumping up their economy by, creating businesses in Mexico and stuff.
I think that's been like the trade for sure.
Yeah, the peso's been a really good trade. I think BBBY is at its lows. I think it's going to rip. I know this sounds stupid. I know it does, but believe me, I feel stupid saying it. But like it just from a technical standpoint, it's there,
Well, but what if it goes bankrupt?
It's going to be hard to bankrupt when people keep buying into them selling their own stock.
It's not like the whole meme stock. The whole meme concept is crazy because it's like you take a company that's supposed to die, and then
you're feeding it.
I know it's like it's like people will go. It's like you take a company that's supposed to die, stock goes up like 400%, and then they sell another, billion shares like in your face, and then it just keeps going down again, and then they squeeze it up again, and then they sell more stock. It's like, how long can you play that game?
That's what like you're literally getting soaked. Look, boom. Look at this buy up. Look at this buy up.
I know.
Get shoved right back down. Look at this buy up. Get shoved right back down. Look at this buy up. Get shoved right back. Like, how much money are you willing to lose on this?
I mean, it's crazy. It went from 20, like it went from like 10. I don't. Maybe it was like maybe went from like $5 to like $30. And then from $30 to 1, and then from 1 to like 12, and then from 12 back to 1.
Yeah, it's just, I don't know, man. It's pretty crazy.
I see what you're saying on that one, but again, that's like, I guess another one for me, like fundamentally where I'm like,
it makes no sense fundamental wise. Zero.
Yeah, if that stock goes bankrupt, then I guess that's what invalidates it.
For this one, I wouldn't buy a single stock and just be calls. That's it. Calls. Calls or puts.
Well, that's the same way I would play. Like if I were to just take a shot at like that or SI, just like one, like a small call, like small position. If you lose on it, you're not going to lose sleep, or it's not going to be the end of the world. But that's the good thing about options. If you learn how to use them correctly, it's a limited risk in the sense of you can lose your full investment, but but at that time you know how much you can actually lose, right?
Yeah, exactly. Yeah, you just don't overexpose yourself to the position. Understand what you're getting into, and then take the position from what what you kind of
Yeah.
calculated. And definitely don't bid higher than where you think you can go. Like if price gets to your sell zone, get the hell out, period.
Yeah. I mean, I've done it myself too many, I mean, I've done it myself and I've witnessed a lot of other people do it. Like it's a mesmerizing trade because you see, like you make money so fast
Mhm.
and you have to overcome that mentally and learn how to power through that because I mean, it's enticing because when you see how much money you're making, you're like, oh my God, it's gonna keep going. And that's when you need to be selling.
Yep. Yeah, exactly. You're like, oh, I think I can go higher. Oh, I need to hit the sell button.
Yeah.
Flux. Yeah, I think this is kind of moving into a pennant. Again, a downward move into a pennant is a bad thing. So I think what we're seeing here is we're seeing this consolidation and we're going to drop the same amount we came in. So that's this high right here, from here to here. That's your drop into here. And I think that puts us into this 28 cent zone. And we should see some consolidation and an up move from there, I think, from Flux. AR just downtrending move, doesn't really have a lot going on, just lower. So nothing too big there. USD peso. So US dollar against the peso again. And it's funny because all these peso currencies are actually, they're outpacing the dollar. It is holding support here, so it looks good. But a lot of these peso currencies are definitely outpacing the dollar as far as growth. They're just recovering much faster. But again, their top end is going to cap a lot quicker than the dollar will. The dollar will have a lot more growth potential. Amazon, I think Amazon goes back to bid the high here around 112 and then rejects back down to the low. So we can see it already starting to move into that move, higher lows. People are going to think this is bullish, and you get a higher high from this position. And people are like, oh yeah, higher high, guys, everybody look. But really, in reality, you're still at a lower high from the trend macro. And I think you'll get a rejection. You'll come back down to 72. Looking at LMT, again, we talked about this trade, held up here, looks great. Possible breakout up here. I would not be buying here. Should have bought down here if you were interested. And really, I'm looking for either consolidation and a shift out, or I'm looking for a breakout now, one of the two. But again, you can wait for the breakout before you take the entry. Again, same thing here, consolidation, higher lows. Looks like we're going to come back up to the high here, about 180. Take the profit there. Lucid. Pop down. I like it. It looks good. Consolidation sitting below the previous lows. Looks like we're going to come back down and retest the lows here on Lucid. Total market cap, again, crypto total market cap is just in a consolidation zone. I think we come back down again and form back down to these lowers, lower highs, so on and so forth. US 30, already talked about that. EOS is still in a bullish momentum move, still to the high, building long. This is one that I told you guys about with the bullish momentum. I think they might pop up to like that $2 zone, maybe 178 is the high, $2 zone here. While Bitcoin continues to consolidate the high of where it's at. VIX over here hasn't broken trend, still bullish trend upwards. I'm still looking for a big breakout, which is a big breakdown in the market, unless this trend breaks. EDU, still bullish. Again, I think they're building layers here. I think they'll pull back to 31. And again, this plays on the China play like we were talking about. Back to 31 and then shift out. And I think they're going for ATH. Possibly they shut down based on previous shoulder over here, reject here and come back down there. And that's where this whole thing ends.
That's probably my favorite Chinese stock. Real quick, while you're on that, there's one called MNSO as well that's been a ripper. I think the play on China might be more away from your big tech and trying to be more in consumer discretionary related categories and categories that have consumer spending aspects because of the stimulus, like the direct stimulus that's being provided to their citizens, kind of like what we got back during the bubble.
Yep. I actually sorry guys, I gotta take off. I've been on for like 4 hours, but this has been great conversation. We'll shoot through more charts on Monday and stuff like that and continue the conversation. If you want to hop back in, Aaron, you're always welcome in. We can always chat
No,
on
no,
Monday.
thanks for having me on. I'm happy that we got to catch up. I like coming on whenever I can.
Yeah, for sure.
Yeah, thank you.
Sorry guys to cut short. It's not really short, 4 hours, but I just realized the time, so I gotta pop off here. But we'll
thanks,
definitely try
Aaron.
to get
All
on.
right, thanks,
Thanks,
Will.
Will.
Thanks
Thanks a lot, Will.
All right, no
Thanks,
problem.
Hey, good
Thanks,
talking to
Will.
all y'all.
Appreciate it, Will. Appreciate it, Aaron.
Great episode.
Yeah, thanks, Will.
All right, see
Thank
you
you.
later.
Yes. Yep. See ya.
Love you guys.